You're almost there. Keep going. Welcome to Module 3. Module 3 is the financial analysis part. So this is your 64 marks section. So it's very, very important. You have to ensure that you understand it very, very well. So I've compiled all the videos and I'm going to see each of them very, very soon. You're going to watch them soon. So make sure you watch everything. If you have questions while you're watching, ask me in the comment section. Share this video to anyone you know will benefit. And make sure you hit the subscribe button. I will see you in the next one. Bye. Financial statement analysis covers is 32 marks. It's 32 marks. I know 32 marks out of 100. That's like a lot, right? A lot. So it's a very, very important aspect of Ican case study report. And not just Ican case study report, but report writing. And if I've not said in my previous videos, I'd like to say here, case study is not just something that you learn to pass an exam. Case study as an accountant, as a business person, it's a way of life because you have to be able to analyze your financial statements. You have to be able to analyze projects, appraise projects. You have to be able to assess what you're doing in the company basically, because if you don't do all those things, how would you be able to make decisions? How would you be able to know where errors are? How would you be able to know where to improve? How would you know where to put control measures? So this topic is important, very, very important, especially as a chartered accountant. So financial statement analysis. So today we're talking about, I'll be telling you what financial statement analysis is, where you find the requirements in your case study, ICANN case study examination, how you will know if it's a financial statement analysis or not, because there's some signs that you need to know. There's some things that you would see that you will know, okay, this is what I'm supposed to do. Then common techniques that we have and common pitfalls as well. So let's start. What is financial statement analysis? Now, a financial statement analysis is simply an analysis carried out on the financial statements to assess the company's financial position, financial performance, and financial health. So that's just basically what a financial statement analysis is. As an accountant, financial statements are like the set of reports, right? Or you even have 5 components of financial statements. We have the statement of financial position, statement of financial performance, another comprehensive income, which is a statement of profit or loss, right? Another comprehensive income. You have a statement of cash flows. You have the statement of changes in equity, and you have your notes to the account. Now, all these make up the components of the financial statement. So, financial statement analysis is just basically analyzing the components of the financial statement, analyzing your statement of profit or loss, analyzing your statement of financial position, analyzing your statement of cash flows, and any other financial statement that is given in the case study you are considering. And when you're talking about the financial position, you get that the information about that is from a statement of financial position, right? Financial performance from a statement of financial performance, and financial health is basically from your cash flow. That's why okay, what is the inflows and outflows of cash from the operating activities, from the investing activities, from the financial activities. Okay, so let's stop there. We're not doing corporate reporting here or financial reporting. So let's leave that for that section. So basically, I just dabbled into it a little so that you can understand what we are saying. So analyzing the financial statement now is one thing to prepare the financial statement. In your corporate reporting, in your financial reporting, you are preparing the financial statement. You are adding up figures. You are trying to compute the profit. You are trying to compute the assets, the liabilities, and all of that. That we are trying to do in corporate reporting and financial reporting. But in ICANN case study, now the report has been completed. The statement of financial position has been prepared. You are not preparing it here. You are now asked, okay, look at this prepared financial statement. Help us to analyze it. Help us to assess the company's profitability, for instance. Help us to assess the liquidity. Help us to assess the financial performance of the company. So that's basically what we'll be doing in financial statement analysis. So case study looks at analyzing the already prepared financial statement. Already prepared financial statement. Now, a financial statement analysis is carried out to assess the past events that have happened in the company. Now, from my previous video, which was on financial analysis, I explained to you how the major difference between financial statement analysis, financial data analysis, and the strategic analysis, where I explained that the financial data analysis, the financial statement analysis, where I used, if you have not watched that video, please check check my channel. I created a video on financial analysis. That you should have watched that video before you watch this video, because that's like the foundation of everything. So financial statement analysis is a category of financial analysis. So please watch that video so you can understand. It's like the videos are linked together. So in the previous video, I was explaining that your financial statement analysis assesses the past events of the company. Financial data analysis assesses the current events that are taking place in the company, and strategic analyzes the future, the prospects of the company. So financial statement analysis is carried out to assess the past events that happened in the company. This is so because the financial statements are prepared and that will be presented to you for analysis are from previous years. And I was explaining earlier in my previous videos that a case of, the management are in charge of preparing the report, right? So after the management prepares the report, some will say the board of directors, some will say the management. Basically, so when they prepare the report, they will call in an auditor to assess the report. The auditor will take some time, right? So most times when the financial statement is published and made accessible to the public, it's not financial statement of what happened yesterday or today. Probably could even be financial statement that occurred, events that occurred months ago. That's why we have IAS 10, where we have subsequent events, right? But that's not what we're going into. So basically, what I'm just trying to emphasize is that the financial statement you are given will be financial statements of events that have occurred previously. So that's why financial statement analysis is analyzing the past of the company, past events that happened in the company. And I explained here that this aspect of an Ican journey is very important because as a professional accountant, you have to be able to analyze financial statements. Imagine you being in the board of the you being called to a meeting with your board of directors and they say, "Oh, chartered accountant, please help us to look at this financial statement. What does line item 5 mean?" And you are just talking gibberish. No, that's why you have this video. So that cannot happen to you, because if you stick to this video, watch it very well, understand it, ask questions. You won't be just talking off points. You will talk in alignment with what you will come out, and you will do well. Because as a professional accountant, like I said, you must know how to analyze financial statements. It's not just about preparing. So now the big question is, I know that I'm supposed to carry out financial statement analysis. Where do I find the requirements? Where do I find the requirement? Because you have to know where the requirement is, right? Like I said, most times the financial statement analysis is usually the first requirement. Yes. Now, I use the word usually because looking back at various case study exams that have occurred in the past few years, the requirement one is usually on financial statement analysis, usually, but anything can change. So it's not like, a status quo, or the examiner has no right to bend the question the way they want to. They can, but most times, usually the requirement one. But I don't just want you to just know it as requirement one, because what if they change it and you have just crammed it or requirement one is financial statement analysis and you just jump into it? So I'll tell you where to find the requirements, how to know, yes, this is the financial statement analysis I'm supposed to carry out. So now the requirements are usually found in the unseen. And I explained earlier that the unseen is the portion of the examination question that is reviewed in the exam hall. Now we have the pre-seen and the unseen. And it said the financial statement will have been given in the pre-seen. You will have been given in the pre-seen. Now, the pre-seen is when you say something is pre, you have seen it 2 weeks before the exam, and unseen is in the examination hall. You be handed examination question. So, in that examination question, it's comprised of the one you have seen 2 weeks. That means they'll publish a portion of the exam question 2 weeks before the exam date, and the remaining portion will be given to you in the examination hall. So most times the unseen is where you find the requirements. That's the portion that was given to you in the examination hall. That's where you find the requirements, the unseen. So the requirements are usually found in the first exhibit of the unseen. So in the first exhibit of the unseen, you see requirements most times. Now I'm using the word usually, so please don't cram me that, Omodesola said usually is the first exhibit, and I check the first exhibit, I'm not seeing anything there, and you become all confused. No, it's usually in the first exhibit. And if it's not going to be in the first exhibit, just check every other exhibit that you're giving as well. Check every other exhibit that you're giving as well. It will help you. So now it may not always be the case, but most times usually the first few pages. So I was showing you November 2019 diets. November 2019 diet. So now let's look at what they told us there. Let's use another color because that color is pink. Yeah, that's good. Now, in this is an exhibit 7 that was given in November 2019 diet. Now, you were told, oh, as usual, the toy farms you were have as completed. So they have given you some information. You have to carry out a detailed analysis of the management account and prepare reports for the board. You have to carry out an evaluation and appraise of the business proposals and recommend appropriate course of actions. So now, in this paragraph, this one here, we have been told what to do, but now it was now broken down into two requirements. So this the report, okay, please draft my review a report addressed to the board of DFPP, that's Detoy Farms and Products. So in this case study, you were to report to you're preparing a report rather, you're preparing a report for a company, Detoy Farms and Farm Products Limited. So you are to address the report to the board of DFPP, Detoy Farms and Farm Products Limited. So the report now should comprise of a review of the management accounts, and so the review should comprise of, can you see, revenue, costs, overheads, and across its revenue streams in comparison with the previous 2 years. And you were further told too that you should evaluate the impact of these changes on the operating profits. Please comment on the bank overdraft soon. So in this requirement 1, you were told to review the management account. Your review should comprise of analysis of revenue, cost, overhead. You should also look at the impact of the changes on operating profit and why is it that the company has bank overdraft even though they have huge profits. So all these things now was requirement 1. Second requirement, we're told to do an assessment of the contract supply service, and in Exhibit 10 and 11, you are also required to critically evaluate the proposed strategic business opportunity, the installation of meat processing plant by DFFP as contained in Exhibit 12, and discuss broader commercial and ethical considerations, as well as the risks that may be associated in accepting or venturing into these business proposals. So, requirement 1, you are assessing the what? The management account. Requirement 2, you are doing what? You are assessing you are assessing a contract and a business proposal. So now I was saying here that the image above shows the requirement of the case study. So this is just basically the requirement. So in the first few pages of your unseen, most times it's really in the unseen, they'll give you a requirement, and the requirements will come like this. So how do you know your requirements? How do you find your requirements? It's usually like in an email like this. So you will see requirement 1 and requirement 2. So it's not a static thing that, okay, must be like this. But over the years, this has been the trend. This has been the trend of how the requirements are being given in the examination. Do you understand? So if you have any question, just let me know in the comment section. And I said the first requirement is the financial statement analysis. How do I know? It's the financial statement analysis. Now, what do we say? Financial statement. When you say financial statement analysis, that's analysis of the financial statement. Now, requirement 1 talks about what? Management account, right? Management account. That means what? It's still a management account. It's still an account prepared by the management. An auditor has not reviewed it. That's meaning, right? So now they're telling you that you should review. When you see some, here you hear things like, oh, review management account, review, check for revenue, cost, overhead. Where else would you see that? In the financial statement, right? Your revenue of, for instance, now is your statement of, is going to be found in your statement of profit or loss. So you should check all those things: your cost, your overhead, the profits, bank overdrafts. When you hear things like that, you already know that obviously they're talking about financial statements. So you are what? Analyzing the financial statements. Do you understand? Do you understand? You're analyzing the financial statement. Now, the big question is, how do I know if it is a financial statement analysis or not? Because now you have just been given you have been given so many information overload is happening here. So how do you know if it's a financial statement analysis or not? Now, from the picture above, that picture I showed you, we are given two requirements. The first one is about the review of the management account, and the second is about assessment of contracts and business proposals. So now, how do you know? I highlighted some questions that you can actually go through. So you ask yourself these questions in examination hall. Assess these questions in examination hall. Do you understand? So when the answers to this question will help you to know what you're supposed to do, because you cannot just be doing something else, right? Because like they say, instruction is part of what? It's part of examination. Instruction is part of examination. You can't just say I feel like doing what I feel like to know. You have to work as per the examiner's requirements. So how do you know is a financial statement analysis? Oh, right there, when I said it here, I said it here. That is a financial statement analysis. Oh yeah, how do I know? How did I find out that is a financial statement? So the clues, the tips that I used to know is what I'm highlighting here for you. Do you understand? So the first one now is, what do I need to do? Ask yourself, okay, what are they asking me to do? Now, the financial statement analysis involves review, always involves the assessment, review, or evaluation of the financial statement or management account. And like I said, management account is basically account that has not been audited, right? So now, the financial statement analysis will always involve an assessment, evaluation of financial statement or man. So when you are seeing anything like review, assess, evaluate financial statement, review, assess, evaluate management account, what's that? Basically a financial statement analysis, right? So you cannot be doing they cannot be asking you to review the management account and they're asking you for a strategic analysis. No, do you understand? Or they're asking you for something else. You review what you're analyzing. What are you analyzing? You're analyzing financial statement. So when you see anything related to management account or financial statement, then you have to carry out a financial analysis. Like now, if you see this now, they said what? A review of management accounts. And even every other information that is given here, revenue, cost, overhead, profits, bank overdraft, they're all in the financial statements, right? So you definitely know from that you're doing a financial statement analysis. You're doing a financial statement analysis. And the next question you ask yourself, okay, what do I need to do? Okay, I need to carry out a review on the financial statements, right? The second question you're going to ask yourself is, where can the information be found? Okay, the information that I need to carry out this assessment, evaluation, or review, where can I actually get this information? The information that I will need, right? Cannot just obviously if they need to review something, they are they need to give you a piece of information, right? Or they're telling you to evaluate something, information somewhere within the examination question would be necessary. I'll be able to use a particular information, right? To review, or assess, or evaluate that particular requirement. Abi? So the next question is, where can the information be found? Where will I find the information that I need? So from the picture above, you're asked to review management accounts, analyze costs and overheads, then evaluate the impact on of these changes on operating profits. The required information can be found in the financial statements. So everything is pointing at the financial statements. Review of management accounts, financial statements. Information that I need in the financial statement. So everything is pointing at the financial statement. So definitely you know you are supposed to carry out a financial statement analysis. Now note, any other requirement that does not fall in line with the above is either a financial data analysis or strategic analysis. If what you need to do is not related to the financial statement, then it is not a financial statement analysis. If the information that you will need to carry out that review, analysis, or evaluation is not going to be from the financial statement, then you don't have to do a financial statement analysis. Do you understand? So in subsequent videos, I'll be explaining financial data analysis and strategic analysis for you. But today, let's just stick to financial statement analysis because that's the topic for today. So let's just focus on that. So now there's some common techniques that you can use. Common techniques. Now many techniques can be used to carry out. There's so many innumerable techniques that can be used to carry out a financial statement analysis. But we're just going to be limiting them down to Ican case study. So now they include the ratio analysis, the trend analysis, the horizontal and vertical analysis, comparative analysis, scenario analysis, so many and so forth and so forth and so on and so forth. In in most exams, the two major techniques that are required include the ratio and trend analysis. In most exams, which might not always be the case, but over the years, in most exams, they require it to do a ratio analysis and trend analysis in most exams. Now, what so I since we have so many techniques, and this is like the trend. Like I said, now this thing is like a trend. In most cases, they can change it, but based on the trend, based on review of previous icon questions that have been tested. So I'm just summarizing the two major techniques that are being tested. So the first one is that we have the ratio analysis. Now, the ratio analysis, this is a financial analysis technique rather, that involves assessing the financial performance position and cash flow of the company. So ratio analysis is basically using ratios. In your previous, like from secondary school, you have ratio is like fraction. You have something like 2:1, 2:1. I mean now, which is also equals to what? 2 divided by 1, right? 2 divided by 1. 2 ratio 1. So this is like a ratio analysis. So you're like having like a division sort of. So ratio analysis is basically a financial statement analysis technique that involves assessing the financial performance, financial position, and cash flow of the company using what? Ratios. That's just a simple thing. So you're just using ratios to analyze it. You're using ratios to analyze it. And we have so many ratios. I gave some examples below. We have the liquidity ratios, which is used to assess the short-term obligations of the company. We have the solvency ratios, which is to assess the long-term obligations of the company. We have the what? The profitability ratios, which is assessing the company's ability to generate profit. We have so many and so on. There are so many ratios. So these ratios we use to analyze the company, but in some cases there can be general requirement and specific requirement. General requirement is just evaluate the financial performance, evaluate the financial statement, evaluate the management accounts with whatever technique you want. But some specific requirements come. Like now, in the requirements we're talking about today, the November 2019 diet, we asked to check the revenue, the costs, the overhead, and bank overdraft. There are so many other things we have in the financial statements. But then that was the area we're asked to look at. We have the asset, the land and building, the plant and machinery. We have so many, the stocks, the debtors, the short-term liabilities. But then they told us that we should focus on what? Revenue, costs, overhead, impact on profit, and bank overdraft. So you have to work based on what the examiner requires, not based on what you know. Do you understand? Like I said, please, examination instructions are part of examination, please. Okay. So the second major technique is the trend analysis. So this involves analyzing financial statements to identify patterns or trends that have occurred over a period of time. Patterns or trends that have occurred over a period of time. Trend analysis is a technique of financial statement analysis that is possible if you are given a financial statement or for more than 1 year. It involves determining the percentage change of financial statement line items. So basically, trend when you hear the word trend, or what is the trend these days? What is the current events that are occurring these days? What's the current pattern of things these days, right? What's the trend of things these days? So a trend, when you say you're doing a trend analysis, that means what has happened over time. The company wants to know, okay, what is the change as our revenue increased from 2019 to from 2019 to 2020? Has our costs increased so that we can know what? So when we know that, okay, revenue has reduced, but cost is increasing. Wow. Okay, should we increase our marketing strategy to create more sales? Okay, probably is it that our products are substandard and we're now using inferior items. That's why people are not buying it. Okay, our cost is high. What are the control measures that we can put, cost control techniques that we can actually implement, right, to reduce that cost? So the company uses that information, like the information you are giving them, they are going to use it to what? To make decisions. They're going to use it in their planning. So trend analysis too is something that is very important. So when they can assess the trend of things over time, what has happened over time, to be able to what? To be able to make decisions. So, but trend, you cannot be assessing trend, or if you have financial statement of only 1 year. Revenue for this year was 200,000. How do you know if that's increased or decreased? That's when you compare with something else. And what's that something else? You're comparing it what? Another year. Right. So trend analysis is only possible if you are giving financial statement of more than 1 year. So that's like the two major techniques. Almost like they'll tell you when they're asking for financial evaluations like that, financial statement evaluation, most times they will require you to do a trend analysis rather, or a ratio analysis, as the case may be. So now, what please the other techniques, please, like I said here, we have the horizontal and vertical technique analysis, we have the common size analysis, comparative analysis, scenario. We have so many, but these are just the two major required techniques are just what I highlighted in this video. So, but there are so many others, so many others. So, what are the common pitfalls? What are the common issues that students have? Now, the first one is wrong technique. Wrong technique. This cannot be overemphasized. Wrong technique. Facial analysis is not the only technique that can be implemented. There are several other techniques. Like I explained earlier. Ratio analysis and trend analysis is not the only techniques that you can implement. There's so many others. There's so many others. and the technique you use should depend on the requirement of the case study. It should depend on the requirement. So most students believe that every case study must do ratio. It's not always the case. Based on the requirements, please follow the requirements based on what's asked of you, based on what is required of you rather. And that thing is poor interpretation. Poor interpretation, the why. Now, I called it the why is because you cannot just tell us revenue increased by 20%. Revenue increased by 20%. Okay. Can you tell us why? Because we as a company now, we're trying to what? We're trying to make decisions. We're trying to make our business better. We're trying to increase our business, right? But if you're just telling me that revenue increased by 20%, that's not information. That's not information. Because you're not telling me what I did right. You're not telling me what I did wrong. You're not telling me why my cost is high. You're not telling me why my revenue is low or why my revenue is high, why my cost is low. You're not even giving me a reason. Then information is not being passed across. So you have to what? Interpret well. You have to tell us why. As much as calculations and interpretations matter, it is very important to interpret results properly. Marks will be lost when interpretation is poor. For instance, I give an example. For instance, you cannot say profitability ratios show that the company is weak. How is that? How is that shows that the company is weak? Okay, weak. Okay, in what area? Okay, weak in which actual area? There's so many profitability ratios. So many. Okay, is it gross profit margin? Okay, is it that we're weak in terms of our direct costs? Okay, is it net profit margin or operating profit margin? Is it that we're weak in terms of managing our overheads? Which area exactly? That's like too broad. So you have to what? Tell us why. Be specific. Tell us why. So that when we are making decisions in the next for the next period or the on decisions in the long term, we would know that okay, so our gross profit margin was very very low because what our cost was high. So the gross profit has declined, or okay, or is it that our overheads are not being we're not maintaining our overheads very well, we're not minimizing them very well. So it's very, very high, so it's affecting our profit. So in the nearest future, we'll be able to put measures in place. So you're a professional. You have to tell the reader why. And I was saying something here that this can only be done when you assess trends in the industry. Trends in the industry, internal events that happen in the company, all other information made available in the case study examination paper. Now, in the case study, you can have more than 20 pages. More than 20 pages question paper. All those pages are not relevant. They're not irrelevant. They're telling you about the company. They're telling you about the industry. So that you can know, you can be able to determine why profit is reducing. Okay, maybe for instance now, the car making company now or car manufacturing companies, maybe there has been a trend of issues in the car manufacturing company or industry, and that's really affected the manufacturers there, and profit has been on the decline. People are not buying cars anymore. People can now fly. So let's say people can now fly, so people don't need car anymore. So I can easily say, oh, I'm going to the market, I carry my wings, I fly. Maybe there's something like a technology that can make us fly. So people may not necessarily need cars anymore. So okay, so when you have assessed the industry, when you have assessed the internal happenings of the company, you'll be able to know, okay, the reason now profitability ratio show that the company is weak because of the recent happenings in the car manufacturing company, where cars are no longer and why customers are no longer patronizing car manufacturing companies, rather they're patronizing um, wing companies, automated wing companies, or something. Do you understand? So when you know the trends that are happening in the industry, when you know what's the internal happenings of the company, you'll be able to determine why some issues are happening. As a professional, you'll be able to assess it. That's why case studies about assumption, but realistic assumption with justification. With justification. So that's why when they give you a pristine, look at the company you are, the industry, the company you're actually considering. Which industry are they currently? So that industry, read on it. What are the advantages? What are the highs? What are the lows occurring in the industry? Be able to what? Interpret well. And that thing again is poor structure. Poor structure. Now, there's no particular structure for I can't so, but then you cannot just be arranging your work anyhow anyway, even if there's no particular structure. You cannot just be arranging your work anyhow, even if there's no particular structure. You have to arrange it under headings. Now you can decide to arrange under headings, you might not decide to arrange under headings. That's actually totally up to you actually. But just make your work neat. Because you cannot be talking about, for instance, profitability ratio. We have gross profit margin, we have maybe ROCE, the return on capital employed. So you cannot be telling us return on capital employed is so full stop. You now go to gross profit margin is so full stop. Gross profit margin, return on capital employed is so. They're going forth, sideways, left, right, center. Everything is just scattered. I don't even know. Now you have not finished telling me what is happening to gross profits. You have not finished telling me, okay, am I making high returns or low returns on my capital employed? It's just scattered. I cannot even assess. I can't even understand or comprehend what you're saying. So you have to actually arrange this in a structure. And you can do it under headings, you may not do it under headings. So that poor structure whereby they cannot deduce the information you're trying to pass across, that also affects. Then another important common pitfall is what missing requirements. Missing requirements. Because requirements can come in multiple folds. Now look at this November 2019 that we're talking about. We're asked to what? Look at it. Look at it. We have to what? Assess the revenue, assess cost, assess overhead, assess gross profit, assess the bank overdraft. So now if you only assess revenue and cost, you have lost marks that could be awarded to overhead. You have lost marks that could be awarded to impact of changes in operating profit and the huge bank overdraft. So you have to what? You have to do everything. Don't just focus on the past because you will lose marks. So those things are actually very, very common issues that students actually face. So that's all for this video. Today we're looking at a practical example because it's one thing to, okay, all this theory, and like I explained in my previous videos, I explained that it's necessary for you to actually know the theoretical aspect, because if I'm just jumping and telling you, oh, this is the practical or this is a full case study report, you may get confused. It happened to me during my own time as well. I didn't really understand what case study was about until I went back, sat on my own, and tried to go through it, because I was just seeing full case study reports, but I didn't know why. Okay, why is this here? Oh, what's the meaning of this? Oh, what are those little mistakes that students make that make them that actually cost marks and then they'll end up failing? What's the meaning of this? What's the meaning of that? So that's why I take my time on this channel to explain to you all those things, so that even if the exam comes and then question or the requirement is tricky, you would still be able to get something out. You'll still be able to, oh, this is the meaning of this is the meaning of this. So that's why I took my time to do an introductory video, so that you can understand the introductory part. So today we're looking at practical examples. Now, this is what they want to see in your case study report. Nobody will ask you what is a financial statement analysis. Nobody will ask you what is common technique. Nobody will ask you what are the common pitfalls. But then once you know that, if you are doing your example, you are doing your practical example, you won't make mistakes because you have knowledge of everything you are doing, right? So now today, in our previous class, we looked at November 2019 diet, right? November 2019 diet was the example that we used to explain. So let's do a practical example on. Let's now prepare a full financial statement analysis, how it looks, the structure of how it looks now, using the November 2019 diet, which was what I used to explain in the previous video, in the previous class, right? So I brought back the requirements here. So please, if you have not watched the previous class, please make sure you do that as well. Is just check my channel, you'll see it, and every other video I've posted. You can also watch them to educate you, learn a lot. So if you have not watched that previous video, please make sure you watch it because it's going to help you. That was an introduction. So I'll just go straight to practical. I may not really do a lot of explanation because we have done that in the previous class, right? We did that in the previous class. So now, the requirements for Ican November 2019 diet was that you should draft for my review a report addressed to DFPP. DFPP is Detoy Farms and Farm Products. That's the name of the company, the client that your company is working for, the client that you are supposed to prepare reports for. That's DFPP. Now, this is what they're asking you to do. A review of the management accounts for the year as presented in Exhibit 9. Your review should comprise of analysis of the key changes in revenue, cost, and overhead across its revenue streams in comparison with previous 2 years. You should evaluate the impact of these changes on DFPP's operating profits. In addition, please comment on the reasons for DFFP. Okay, was I saying DFPP? Sorry, it's DFFP, Detoy Farms and Farm Products Bank overdraft at the end of the year, despite the huge profits there. So this is what we're asked to do. This is and how do we know it's a financial statement analysis? Please watch that previous video. It was not explained. So one of the pitfalls that was mentioned in the previous video is missing requirements. So the first thing you do when you have a case study examination question like this or a requirement like this, the first thing you should do is what? Write out the requirements. Yes, write out. Yes, the requirement is right there staring in your face, but write it out so that as you are doing it, you can tick it off the list. Okay, I've done this, I've done this, I've done this. Or just write it out basically. Do you understand? So the first one is what we should analyze what changes in revenue. The second one is what cost, changes in cost. The third is what overhead. The next one is what the impact of changes in operating profits. And then we have what then the reasons for bank overdraft despite huge profit. So I wrote out all what we're supposed to do. And after this now, after you do all this analysis, talk about everything I've asked you to do here, then you what conclude and recommend. You will give your conclusions and your recommendations. Give conclusion. So now let's now look at it out one by one. Now I said something. I said writing out all the requirements, writing out all you need to do in this manner will guide you, and you will not miss any requirements. Imagine knowing that oh my god, I was asked to review overhead and operating profits. I did not know, and probably that's like five marks. You have lost 10 marks there that I could have just gotten easily if you had what written out the requirements and if you had what done everything you were asked to do. Like I said in my previous video, instruction is part of examination, so this will help you. So now after writing out all the requirements, now coin a heading from the combination of all the requirements. Coin a heading, coin a heading, coin a heading. Now we already know. Okay, let me use a darker paint, a darker color so that it will not be too bright. Let's use a darker color. Okay, yes, that's good. That's fine. So coin a heading or a title from the combination of all these requirements. Coin a heading. So now you have all this, right? So let me decrease. Let me zoom. Let me just push it back a little so that you can see clearly. Okay, yes, that's good. So now we have written out all our requirements, right? So now next thing I want to come a title or a heading from all these requirements. So now we have something like the analysis of key changes in revenue, cost, overhead, operating profits, and reasons for bank overdrafts from 2017 to 2019. So now you can see that we have coined the heading, and this heading now it covers what? It covers everything. It covers the revenue, the cost, the overhead, the operating profits, right? And it covers what? The bank overdraft. It covers everything. So writing out your requirement like this will not only guide you, so you will not miss out on any requirement and miss marks, but it's also what guide you when we are what trying to coin a heading. So it's very, very important to actually do that. So please write out the requirements. It will help you a lot. Please do that. So you can use any other heading, like I said. It's not a must that you coin a heading from your requirement. You can use any other heading. It's not a must that you do it this particular way that I wrote out, but it's a good way to actually start to help you a lot. It's a good way. So now let's now start. It's the financial statement and how it will look in your body of report. So let me bring this back so you can see clearly. All right, so just like my heading, my heading was, let's go back up. The analysis of key changes in revenue, cost, overhead, operating profit, and reasons for bank overdrafts from 2019 to 20 from 2017 to 2019, right? So that's the heading two I will give. The analysis of so that same heading, right? So now let's now go to the body. So the first thing now, I just gave a little introduction of what I did. The review of managed accounts of DFFP, that's Detoy Farm and Farm Products. You can decide to write it out in full, like Detoy Farm, write it fully. From 2017 to 2019, comprised of analysis of key revenue, costs, overhead, and impact of the change on operating profits and the reasons for bank overdrafts despite the huge profit. So now this was what I did. I just gave like a scope. Okay, what I carried out, what I did, just a general review of everything. Basically, that's what I just basically just an introduction. That's the word. an introduction. So now I now took it out one by one. I was asked to do what? Revenue, cost, overhead, operating profits, and what? Bank overdraft. So each of those things I put them under heads. You might decide to put your own under heading. You may not, you may decide to do it together. That's totally fine. It's good. It's not going to, but like I said in the previous video, just ensure you have a what proper structure. Ensure that you say when you read it, you know that this thing is communicating to me. This thing is communicating information to whoever is going to read it, not just mumble your words up. No, but you can decide to do it heading by heading. You can decide to do it paragraph by paragraph. However, just know that anyone you are choosing, you are saving time because there's no time. So revenue, cost of sales, then overhead, operating profit and back. So I wrote out everything heading by heading. So now, then you start explaining in your appendices section, like your appendices section, you would have what you would have done your calculation. If you don't know what appendices is about, if you are not really sure what it is about, please watch my video on appendices. I've created a video on appendices on my channel. Just check for it. You will see it. Learn it very well because it's very, very important. I told you that's the foundation of your report. That's where all the magic happens. Because if your appendices is wrong, I will come here and be interpreting something else. For instance, now if I made a mistake and I'm getting 1,000 1,170, I'll come and interpret that's increased by 1,170. Do you understand? That's increased by 1,170. That's what I will interpret. Do you understand? So it's very important that your appendices, like in your appendix section, you are. In fact, that's the first thing you should do because then the tension is not yet too high. Or there's nothing like 30 minutes more yet, and you can do it very well. But don't spend too much time there, please. As well, it's just 8 marks. So just watch that video. It's going to explain everything to you. So this has been done in the appendices section. Now, so let's read it. The analysis revealed, that's analysis in the appendix section, right? Revealed that the revenue of DFPP has been growing steadily as it increased by 17% between 2018 and 2017 and 19% between 2019 and 2018, showing an upward trend. Now, I wanted to do this in the video, that's why I didn't write it yet. So you can see something like appendix 2 appendix 2. So depending on whatever appendix that you have done, it could be 5, it could be 6, it could be 1. Sure, I'm just taking an example now. Okay, let's say I did it in appendix 2. So anybody that wants to know, okay, how did it increase, how did you calculate it, how did you compute it, they can refer to appendix 2. So you are justifying your appendix, you are justifying the interpretation that okay, this thing I did not just decide to write 70%, or I did not just stretch my neck to my neighbor and so that my neighbor wrote 70%. That was why I wrote 70%. No, I actually did some calculations. And then, like I said in my previous video, another mistake that students make is what poor interpretation. So you don't just say it has increased. Why? How? What happened? What should we do? What is it that we're doing right? Because now upward trend, that means it's good. That if revenue is increasing, it's a good thing, right? But you have to tell the company, okay, how, why, what's the reason, so that they can actually leverage it and do more on it. That okay, that area, increase it, right? Maybe put more energy there so that we can actually have higher increase in future years. So now this was due to the lucrative nature of the agricultural sector, especially in poultry farming, which accounted for 45% of the total revenue between 2019 and 2018, while fishery, cattle, and veggies accounted for 55% of the revenue. So now, in this case, now I'm telling them why. Okay, the reason why their revenue is increasing because wow, they're in a lucrative sector. They're in a lucrative sector, the industry where the TFFP, that's the toy farms and farm products, is in like industry where they are is a lucrative one. And how did I know? I saw this in the what? In the body of the report, in the question paper. In the question paper, they talked about it there. And apart from that, I also I looked at the revenue of the company. I said, oh wow, so poultry farming is really doing well. So this poultry farming is really amounting to it's adding a lot to the revenue. Oh, so that means poultry farming is doing, even cattle farming was also doing well. But poultry was actually doing very well. So do you understand? So you can just tell us a reason. Don't just tell us why. So the company will know, okay, so The agricultural sector is a lucrative one indeed. Okay, let's expand. Oh, the agricultural sector is a good one indeed, and poultry farming is doing well. Let's add more investment to the poultry farming. Let's do more in the poultry farming so that our revenue can increase. So now you have given this is information. It has increased from 70%, 90%, and it's decreasing by increasing rates, increasing by decreasing rates. Don't confuse anybody. Do you understand? Tell us why. Give us a reason. The accounts revealed that DFFP achieved the highest revenue in poultry farming, which is a highly lucrative aspect of agriculture in Nigeria and Africa as a whole. And this information was, I got it from what? The question paper. When we were talking about the agricultural sector, talking about DFFP, talking about the challenges and all of that, and the good sides about it as well. So, and the achievements as well. So, that 20 pages question paper that they're giving you is not, oh, these people are just boring information. That information is necessary. It's going to help you. It's going to help you. And now understanding and knowing that in the from the pre-scene, you will have known that the company are dealing with is a agricultural is in the agricultural sector, right? The company is in the agricultural sector. So you will have want to read about the agricultural sector. So you will know that okay, agricultural sector is lucrative, right? Do you understand? So it helps a lot. So that's it about revenue. So just talk a little about it. Then the second thing they asked us to talk about was the cost of sales. The cost. The cost of sales has increased at the same rate increased at the same rate as revenue, which also increased from 17% to 19% between 2017 and 2019. So it has increased. The cost of sales is increasing as revenue is increasing by the same proportion. The cost of sales is also increasing. This indicates that DFIP needs to put cost control measures in place to produce and so sorry to reduce cost and increase operating profits So not only that, yes, your revenue is increasing, which is a good thing, but check your cost of sales. It's increasing at the same rate as your revenue. And if you don't put cost control measures in place, the cost can overshadow the revenue so that you start making a loss. Because if the cost of sales is higher than the revenue, you should just be swallowing up the revenue. Do you understand? So now this has passed information across. So you have told us, so the company now knows, okay, it is increasing. Now, what do we need to do? Cost control measures. So you have to interpret well. You're a professional. You're not just coming to give us information, and telling us solution because the company, I want to make money, is a company, is a profit-oriented company, it's not an NGO. It's not a non-for-profit organization. I'm here to make profits. So as a chartered accountant that I'm telling you to prepare a report for me, you have to give me information that will help me in the longer term, help in my planning, help in my decision making. So that's it. So another one is the overheads. We have to also look at the overheads. The overheads, which include the selling and administrative expenses, also increased. Coincidentally, the increased overheads was in the same proportion as the cost of sales, which increased from 17% between 2018 and 2017 and 19% between 2019 and 2018. The overhead as a proportion of revenue remains stable over 3 years because the expenses incurred on sales and administration increased as revenue increased. They increased as revenue increased. They increased as revenue increased. So as revenue was increasing, they too were increasing. As revenue was increasing, this was increasing. So the overhead was not even, it was just stable because it was just as it was running, as revenue was going ahead, overhead too was going ahead. So what the company needs to was put measures in place. If not, it can run ahead and far, and then we'll be making a loss in the company. So it's very, very important. So the next one is what operating profits. Now, hope you're learning a lot. You can see the structure, right? Hope you're learning a lot. That's good. Now, it was discovered that the gross profit remains stable as a change of 70% between 2018 and 2019. Between 2018 and 2019, sorry, between 2018 and 2017, and 90% between 2019 and 2018 was discovered. This was because, so you have to tell us why. Of the proportionate increase in cost of sales, which eroded the potential increase in gross profits. The consequence of the proportionate increase in overhead and revenue is that operating profits remain stable. So you're telling us the reason. Now, operating profits remain stable. Do you understand? It remains stable. It remains stable. And why? Why did it remain stable? It remains stable because as cost was increasing, as revenue was increasing, cost was also increasing. As revenue was increasing, cost was also increasing. So it remained stable. It remained stable. It was supposed to have increased. No, I can hear you. It was supposed to have increased, but it did not increase. Do you understand? It did not increase because what? The cost of sales overrode the revenue. The cost of sales overrode the revenue. So that was why the operating profit did not increase, remained stable. Now, the last one is what? The bank overdrafts. Now, the decrease in bank overdraft showed that DFFP had plugged profits back into the business as it's reduced from 6 million, 6,068,000 in 2017 to what? 1,952,000 as of 2019. So now, in this case, no, they tell us that why is it that we have huge revenue, a huge bank overdraft. That was the information, right? The requirement. Why is that we have huge bank overdraft and we are having profits? Why? The reason is basically because what? It's not as if it's high. The company has hardly been paying it. We have been plugging profits back. I've been putting profits back into the business. But then we still need to do more, right? We still need to do more. And putting profit back into business, that means what they'll be reinvesting their returns, right? So that they have been paying off their bank overdraft as well. They've been paying off their bank. But if bank overdraft was increasing, that would imply that the company was not using profit because they need to actually finance the company in some way. And if they're financing the company by debt, which is like bank overdrafts, right? But now it's decreasing. That means they are paying off their bank overdrafts. And how are they getting money? They are plugging profits back. So you tell us a reason. However, the bank overdraft is still high, and continuous use of bank overdrafts can threaten the going concern if not settled as ended. So you are giving reasons. So conclusion. Now you now give after you now talk about all those requirements, you now give a conclusion. The conclusion will encompass everything you have done. The review of the management accounts show that although revenue is increasing, the gross profit and operating profit margin are stable, and this is due to the proportionate increase in overheads to revenue as and the high cost of sales. So you are concluding, you are giving a conclusion. Do you understand? You are giving a conclusion based on everything you are doing, you have done. Then you give your recommendations. Oh, cost control techniques should be put in place to control high cost of sales. You tell us poultry farming should be leveraged as it produces high profit. More profit should be put in the business to reduce bank overdraft. So you just recommend to them. And this conclusion and recommendation, I'm still going to summarize it when you get to the executive summary. So that's just basically how the structure of your financial statement analysis will look like. Obviously, you can make it longer, but it's just like a sketch of what you should do. So you give like a summary introduction or something like that of what you are doing. Then, based on the requirements you have listed out, you start explaining them one by one. Talk about revenue, give us why. Talk about cost of sales, that pretty tell us what is going on in cost of sales. Tell us why, what we should do. Overhead, tell us okay, what is happening to overheads. Tell us why the operating profit as well. Tell us the bank overdraft. And you know, they told us that the impact of these changes on operating profit. And we talked to them, we told them that the reason why gross profits is what it remains stable. The reason why is because what cost of sales is swallowing up the revenue. Do you understand? It's swallowing it up because it's increasing in the same rate. Then bank overdraft too. We told them the reason based on the instruction. Then we concluded and gave recommendations. So it's actually not difficult at all. Do you understand? So I hope you also learn a lot from this video. I've talked about financial statement analysis. If you haven't watched all those videos, make sure you do so because you're going to learn a lot, a lot, a lot. So today we'll be talking about financial data analysis, and I'll be giving you an introduction just like I did when I taught you financial statement analysis. And like I said in the previous video, in the previous class, that nobody is going to ask you what is the financial data analysis or what are the techniques of carrying out a financial data analysis. But you know, when you understand these things, you understand concepts, you understand the reason why you're doing certain things, you understand what is behind that thing. Like, okay, what's this thing about? It's easier to actually carry out analysis, it's easier to know what to write, it's easier to interpret because you have proper understanding, you have a good foundation, right? So all these videos are just for foundation, just so you can understand what it means. So when we are doing the practical aspect and we're saying, oh, do this here, you will not be, oh, what are we doing? You have a clear picture, right? So today, in today's class, I'm going to be telling you what is financial data analysis. I'm going to be telling you how you find the requirements, how you know if it's a financial data analysis or not, the common techniques and the common pitfalls as well. So without much ado, let's dive into the video, into the class for today. So, what is a financial data analysis? A financial data analysis is simply an analysis carried out on projects, contracts, or current proposals of the company. So, when you are actually analyzing a contract, you're analyzing a project or proposals that the company is considering on embarking on, then you are doing a financial data analysis. So, you are analyzing the data, you're analyzing information as regards that. Do you understand? So that's a what? That's a financial data analysis. Now, a financial data analysis is carried out to assess the current proposals that the company is considering. To assess the current proposals that the company is considering. Remember when we talked about the financial analysis video. Please, if you have not watched that video, please make sure you watch it. The video of financial analysis where I explained that the financial statement analysis is like looking at the past of the company. I use like your childhood. The financial data analysis is looking at your current state, your adulthood, and strategic analysis is what's looking at the future, the prospects of the company. So, a financial data analysis is carried out to assess the current proposals that the company is considering. And I explained here what is data from secondary school definition, basic definition of what data is. Data is what? Unprocessed information, right? In the same vein, financial data analysis involves analyzing unprocessed data and presenting detailed information in a report. So now it's called, I was trying to make you understand why it is called a financial data analysis. Just like we did in the financial statement analysis class, right? Why I explained a lot. If you have not watched that video, please make sure you watch it. Check my channel, you will find the video there. Now, financial data analysis is called financial data analysis because you are analyzing financial data. What is data? Data is unprocessed information, right? So you'll be given data on the revenue, the costs of the project, the inflow from the contract, the outflow from the contract. You'll be giving other things that will come up and everything. So those are data. You have not processed it yet, right? Now that's data, information that has not been processed yet. So now you're supposed to analyze that financial data and do what? And interpret it and give recommendations and conclusions. Turn that data to information. Because now in a company, if you're just seeing outflow 50 million, inflow 100 million, working capital 20 million, you're just seeing so many information. That's not, if that's too many data, that's not information. So now you, as the future chartered accountant, you are expected to carry that data together and say, okay, now the revenue is 100 million, right? The cost is 50 million. We're going to incur working capital of 10 million. We're going to incur maybe some other things and some other costs that are surrounding that contract or project. So you, as a financial accountant, you're supposed to carry that data and analyze it and then submit a report. So when the board of directors or the top management or whosoever you are submitting the report to, when they see it, they'll be able to understand. Okay, this is what the project is going to be. Oh, this project is not viable. Oh, this project is viable. We should embark on this project. We should not embark on. That's what they want to know. All those plenty figures, plenty numbers is not information to anybody. So now, financial data analysis involves analyzing that financial data so that it will no longer be a financial data. It will not become a what? A financial information in that sense. Do you understand? It will not become an information, a processed data. So that what they're just trying to do. So the data can be the proposed contract terms, that's the inflow, outflow, the proposed project income and expenses. So you are analyzing the financial data. You have to determine the most appropriate tool, analyze the data given, and then report the necessary information, which includes interpretation, conclusions, and then recommendations. So that's what you are just basically doing in financial data analysis. Now, the big question is, where do you find the requirements? Now, how do I even know that I'm doing financial data analysis? Now, just like I said in the previous video on financial statement analysis, please, if you have not watched that video, please make sure you watch it. on financial data analysis, financial statement analysis, I also explained it as well. Now, financial data analysis is usually the second requirement in your case study examination. Now, just like I said, it is usually does not mean ye and amen that it's going to always be like that. But studying past questions, studying previous Ican questions, and the sequence, looking at the sequence of how questions have been set and how the requirements have been structured, the financial data analysis is usually the second requirement. But please don't cram this because anything can change, and so you will not get confused. Probably you're not seeing it as a second requirement. It can come on messy. Please don't do that. But in most cases, the financial data analysis is usually the second requirement in your case study examination. Now, the requirements are usually found in the unseen. And I explained earlier that unseen is a portion of examination question that will be reviewed in the exam hall. In the exam hall, you understand? So 2 weeks before your exam, a portion of the examination question will be released on the ICANN website where you can download it. But not everything will be shown, obviously. When you enter into the examination hall, they'll now give you a complete question. And so you have the pre-seen. The pre-seen is the part you have seen before, and the unseen is the part that you are just going to see in the examination hall. So most times the requirements for the financial data analysis is usually in the unseen. That is the part that has been given, that the part that will be given to you in the examination hall. So you'll be given detailed information about the contract or the proposed project or whatever the company is trying to consider. You'll be given detailed information about it. They will detail every information. So you don't need to worry about, how do I get information? Do I start formulating information? Do I start formulating data by myself? Do I start gathering? No, you don't need to do that. Don't worry. Everything will be given to you in the examination question. Okay. Now the requirements are usually found in the first exhibits of the unseen. Now, take note, I'm using the word usually. Please don't cram these things. Please don't cram these things. It is not always the case, but most times it's usually in the first few pages of the unseen. So now I'm just trying to give you tips. So in case you have checked from back to back, you have checked cover to cover, page to page, you have not seen and you could not find the requirement, or you didn't locate where the requirement is. So you cannot say, okay, let me check the first few pages, right? So if you don't find it easily or you are confused as to where it is, because I can question can be more than 10 pages, 15 pages, 20 pages. So it's a lot to check, right? So in case you have checked cover to cover and you have not still found where the requirement is. So that's why I'm giving you this tip. So you just okay, let me check the first few pages of my unseen because it's most likely going to be there, right? So that's why I'm giving you these tips. So now during our financial statement analysis class, we used November 2019 diet as an example. So let's just continue in that vein, right? So this is exhibit 7. And we treated requirement 1 in the financial statement analysis class. That's the video. Please, if you have not watched it, make sure you do that as well. And now today we focus on requirement 2. Requirement 2 is what we'll be focusing on because that is our financial data analysis, right? I know, remember we said that financial data analysis would involve probably a contract, involve a business proposal, it will involve probably a project or something like that. So that's why you know. Now, this exhibit 1 now talked about management accounts, financial accounts, all those things are financial statement analysis. We're not concerned with that here. I've treated that in our previous class. So if you missed that class, please watch that video. And the second one is what? It's talking about what? A contract supply, an assessment of the contract supply service as contained in Exhibit 10 and Exhibit 11. You're also required to critically evaluate the proposed strategic business opportunity, the installation of meat processing plant by DFFP as contained in Exhibit 12, and discuss broader commercial and ethical considerations as well as the risk that may be associated in accepting or venturing into these business proposals. So that's basically what they told us to do. So we are going to treat it in this class. So the above information shows the requirements of the case study. That is the second requirement is the financial data analysis because the second requirement covers contract, covers projects, proposed business proposals, and that's the financial data analysis. So assessing the current proposals of the company, what they are currently considering, what they're currently considering to accept or reject, to venture in, not to venture in. So basically, that's what we're going to be looking at today. That one we're going to be looking at today. Okay. Yes. So how the question another question is, how do I know if it's a financial data analysis or not? How do I know? From the picture above, we're given two requirements, right? The second is a financial data analysis. Usually the second requirement is a financial data analysis, but do not cram it in that way. You need to check properly. So now there's some things, there's some signs, and there's some keys that you can actually use to know, some steps that you can follow to determine whether you are doing a financial data analysis or not. So I'll be showing you those steps in this video. So now the first thing is check the requirements. All you need to check is the requirements basically. Now, is the requirements telling me, is it talking about a contract? Is it talking about a project? Is it talking about a proposal? What's it really talking about? So if it's talking about financial statements, management accounts, obviously this is a financial statement analysis, right? But if it's talking about a contract, a project, a business proposal, then you definitely know it's a financial data analysis. Just like here, we have contract supply service, we have proposed strategic business opportunity, and all of that. So it's basically what is definitely going to be a financial data analysis. So from the example above, you are required to assess a contract supply service from a retail storage shop and the installation of the meat processing plant of DFFP. Now DFFP is what Detoy Farm and Farm Products. That's the name of the company. That's the client that you are actually preparing this report for. That's DFFP, Detoy Farm and Farm Products. Good. So after that, now that this indicates that what you are to do a financial data analysis. Another thing you should also check is what, check for data. Check for data. Once you can determine that you have to perform a financial data analysis, now you have known that okay, I'm supposed to carry out a financial data analysis, right? You have been able to see there's a contract, a business proposal that has been ascertained, right? So the next thing you need the data. Remember, what are we doing? We are what, analyzing financial data. We're analyzing the unprocessed information, right? So check for the data. Where is the data? Once you can determine that you are performing a financial statement analysis, check for the data concerning the contract. Now, in this case, now we are even kind of nice to us because they told us, oh, as contained in Exhibit 10, as contained in Exhibit 11, as contained in Exhibit 12, right? Which I showed, which we saw in the question, right? We are seeing that in the question. So as contained in Exhibit 10, in Exhibit 11, in Exhibit 12. So this is basically like they have told us where to look at it. So check for the data. Go to those exhibits that you were told and check for the data. In most cases, this can also be found in the unseen. Yes, the exhibits will usually be in your sync. Check the list of exhibits as well for anything related. Now, check the image below. Now, look at this now. For instance, now exhibits they told us 10, and you can see email from Tom Aderogba, the shop, right? That's the contract supply service from the shop. And exhibit 11, this was reaction to the shop contract terms. Abino. And the last exhibit 12 was proposed installation of integrated meat processing plant. So all these things now most times will be seen in your unseen. Be seen in your unseen. Do you understand? So can you see? Can you see the head unseen? Can you see it unseen? So basically, this most time going to be unseen, but don't cram it. Like I said, please have an open mind. I'm just giving you tips as per how the sequence of Ican exams have been, so that in case you find you are lost, in case you are a bit confused, at least these tips would help you to find yourself. But please, like I said, don't cram it. Keep an open mind. Understand these things. So when you understand these things, you'll be able to, even if they scatter it, they put it as in the after unseen, the pre-seen, anywhere they put it, you would be able to identify it and do all the needful and all what's necessary, right? So the next thing you do is that you determine the appropriate tool. Now you have looked at the data. Now the data will determine what you're supposed to do, right? If they give you information about merger, they're telling you something about acquisition, obviously you know you cannot do MPB for that, right? But they're giving you information like okay, cost of capital, they're giving you inflow, they're giving you outflow, maybe scrap value, they're giving you information like that. Do you get? So obviously you definitely know that you're going to do net present value, right? So the kind of information, that's why I told you check for the information first, check for the data rather. Okay, I'm saying information. Yes, it should be checked for the data because it's the data we're processing to become information, right? So yeah, check for the data. why is data in those exhibits. So that data would help us to determine the appropriate tool that we're supposed to use, the suitable tool for carrying out the analysis. Then after that, you analyze the data and present the necessary information. So you analyze the data using the most appropriate tool that you have actually determined as a result of scanning through the data, right? Then you analyze the data, and the analysis should be done in the appendices section. In the appendices section, please do it in the appendices section. Do it in the appendices section. Don't calculate in between your reports. It should look all messed up. So do it in the appendices section, then you can link it. I taught you how to link appendices. I taught you all about appendices. If you have not watched that video on appendices, please check my channel. I posted a video on all about appendices. You can just watch it to help you a lot. So the analysis should be done in the appendices section of your report. After analyzing, go to the body of the report, then interpret, conclude, and give suitable recommendations. I use the word suitable. Don't give recommendation based on what you have crammed or based on what you have seen in past questions. Give recommendations that are suitable and are in line with that project or contract in view. Now, the next thing is techniques. My dear friend, my dear future chartered accountant, there are many techniques that can be used to carry out a statement analysis, financial data analysis. There are many, many tools that you can use actually to carry out a financial data analysis. They include net present value, payback period, volume profit analysis, valuation method, so on. There's so many unending techniques. So please don't just think everything is net present value. Like I said in my financial statement analysis class, I made it to understand that most students, one of the pitfalls is that students believe that everything should be ratio analysis. My dear friend, everything cannot be ratio analysis. Please, it's not always going to be ratio analysis. Like there was a question, I think May 2021 or so, was it May 2021, that talked about performance scorecard. You understand? There are some questions that will talk about merger and acquisition. So don't just cram it like that. Do you understand? So it's not always going to be net present value, but in most cases, it can actually be because if you are present a project, it can actually be a net present value question. Do you understand? So that's why you have to acclimatize yourself, go back to your notes, read on them, look at your past question, look at your textbooks, your study texts, read it, scan through again. Most of the techniques have been taught before in previous levels. CVPA you have been taught before. I think CVPA was taught in costing in your ATS 3. If you did not do ATS, CVPA, you can go through it again. That's why you have text. So you not doing ATS is not a barrier at all. Go through the text, look at the evaluation methods, learn them again. Merger and acquisition, for instance, now was taught in your SFM, your strategic financial management. So all these things you have to say it's good to not just focus on one course. All of them are actually linked. All of them are linked. So please, there's no one way to it. There's so many techniques. So you can just study it and then you'll be able to understand better and apply the techniques where necessary. So what are the common pitfalls? The first one is the first one is wrong technique. Now, ratio analysis, I was explaining here. You know, we're talking about financial analysis. Ratio analysis and net present value are not the only techniques, please. Ratio analysis are not the only, please, they're not the only techniques because every student believes that Ican exam, ratio, NPV, ratio, NPV. It's not always going to be ratio analysis and NPV. That's net present value. They're not the only techniques that can be implemented. Actually, there are several other techniques. Like I just explained earlier, we have cost borrowing profit analysis, we have valuation methods, we have payback, we have so many, so many that can be implemented. And these techniques, the technique you use should depend on the requirement of the case study. Don't say, oh, I know ratio analysis best. That's what I want to apply. Or I know net present value best. That's what I want to apply. So if they don't give you parameters that you need, would you formulate or assume parameters? Yes, you're doing a case study exam. And as a professional accountant, you can make assumptions. Yes, but the assumptions must be realistic. You not make assumption by ignoring what the company gave you, ignoring what the examiner gave you, and then formulating your own. It's a different thing. Oh, the information was probably not completely given and you want to be flexible enough. You want to display your expertise, and you want to display that, oh, I'm a chartered accountant, or I'm going to be a chartered accountant. Oh, I want to display my expertise. Oh, let me make some realistic and suitable assumptions. It's different than you now ignoring everything that I'm giving you and then formulating your own. Please don't do that. The technique you use should depend on what the examiner has asked you to do, depend on what the requirement of the case study. Then second one is poor decision making. Now, why are you carrying out a financial data analysis? It's not that the company isn't should be it's the company that gave you their revenue to be 100 million. This is just an example, a hypothetical situation. So I'm just giving an example. It's the company that told you that revenue is 100 million. It's the company that also told you cost is 50 million. It's the company that also told you working capital is 10 million. They have all those information already with them, and they have that data. It's not your information because that's unprocessed, right? They have that data with them already. So they don't need you to come and be telling them revenue again is 100 million, cost is 50 million, working capital is 10 million. They don't need you to come and repeat what they already know. They want you to help them to analyze these things so that they can make what? They can make decisions. So now, if you are not coming, you're not making poor decisions, you're not making good decisions for them, then it's like a total waste of your services. It's total waste of them calling you to come and help them to analyze because you are telling them what they already know, right? So how would you feel if you were the owner of a company and you have paid handsomely to a chartered accountant and the person is still telling you exactly what you knew before? No piece of information, no news, no nothing. Do you understand? So you have to ensure the major reason for carrying out financial data analysis is to make decisions. So you have to ensure that you present the information in such a way that the company can easily make decisions without technical jargons, without big English that even you will be confused if they ask you to explain. So please make the English simplified, but keep it professional as well. So inflexibility, you have to be as flexible as possible. In the examination hall, you're a professional, so you can make assumptions, just like I said, but they must be what's realistic. In fact, let me even put it there by the side. You can make with capital letters so that you will not forget. Realistic assumptions, but they must be justified. For instance, if net present value is the most appropriate and the number of years or the cost of capital was not specified, you can make assumptions. You can make assumptions as a professional. You cannot ask the client for extra information. Use professional skills you have acquired over time to perform the analysis. Please don't go and say, in your conclusion, no conclusion can be made concerning this contract because the client did not give us complete information. The client therefore should give us complete information. So, do you understand? It's a different thing that next present value is the most appropriate abi, and you were not giving inflow, you were not giving outflow, you were not giving cost of capital, you were not even give you were only giving scrap value. Now how do you want to do that? But it's different that, oh, it's a different situation if you are giving outflow, you are giving inflow, you are giving scrap value, but you are not giving cost of capital. You can say, okay, every other information was given, just one. You can assume. Not that you now assume everything, obviously. Do you understand? But you don't go and start asking the clients to be giving you information. Do you understand? That the clients should give us more information. No, don't do that, okay? Don't do that. Don't do that. Please don't do that. Be flexible. Do you understand? Be flexible. You are allowed to make realistic assumptions. Realistic assumptions. Please. Realistic assumptions. Realistic assumptions. So poor display of professional skepticism. Now, as a professional, we are expected to have a questioning mind. We are expected to have a questioning mind. Do not take all you are giving without properly assessing it. You have to exercise professional judgment and intelligence. Professional skepticism is very important in financial analysis. Do you understand? It's very so you have to have a questioning mind. Okay, this information, these probabilities, they're giving us probabilities. Did he actually analyze these probabilities well? You understand? You have to display like, oh, I know this thing very well. Do you understand? So it's part of what? It's part of financial data analysis. The another issue again is that poor interpretation and conclusion. Very, very poor interpretation can actually be a problem. Poor interpretation and conclusion too is a big problem. So the why, as much as calculations and interpretations matter, it is very important to interpret your results properly. You have to ensure you carry out all the analysis that is necessary, and then explain the results in such a way that the company can make proper decisions. When interpreting and concluding, you cannot just make conclusions without stating the reason why that decision is made. You cannot just say accept the project, venture into the project, accept the contract. You cannot just say that. Why? This project should be accepted because it gives a positive NPV, net present value. This project should be rejected because it gives a negative net present value, which implies that the project is not viable, which implies that the project is not profitable. You cannot just tell them go left or go right, don't do this, don't do that. You have to give what? A reason. You understand? So, point interpretation and conclusion. Remember that you are doing a financial data analysis to help the company make a decision. So, you have to ensure that that is achieved. Do you understand? The next one is poor structure. Poor structure. There is no particular structure for the financial data analysis, but you have to arrange this properly. Do you understand? Now, but in this our question now, we're told to look at contract supply service from the shop. And we're told to look at the the installation of the integrated meat processing plants, right? So you cannot be talking about contract supply service, then you go into installation of meat processing plant, then you come out from there, you enter contract supply service, you go, you stop there, yeah, everything is just smuggled up. Like I can't even at a glance or even reading it in 10 minutes. I have to spend hours reading your report before I can deduce what you're trying to say. No, so it has to be about okay. Now you're doing contract supply service. If you want to do it heading by heading, like I explained earlier, you can do it heading by heading, and you can decide to do it paragraph by paragraph. So you can have a heading, contract supply service. So this is something like this is what I'm talking about. So you can have a heading like this. You can have a heading, contract supply service. Then you explain everything you have there. After that, installation of meat processing plants. And afterwards, you explain everything there. I may decide not to do it heading by heading. You can just do it, okay, paragraph one, we talk all about contract supply service. Paragraph two, we talk about installation of meat processing plants. Like I said, any decision you're taking, any step, any method you are using, just ensure that you are fast. That's what matters, right? So I cannot be talking about meat installation of meat processing plants here. Jonas, I'm talking about installation under contract supply service. And I'm talking about installation. No, let everything be arranged. Let there be a proper structure for your report. And finally, missing requirements. Missing requirements. Missing requirements. So it's very, very important. Now, the requirements given by the examiner can come in multiple folds. Like now, for instance, now here now, we are looking at contract supply service. We're looking at installation of meat processing plants, and we're also discussing the ethical and commercial considerations as well as the risk. Do you understand? So all these things now we have to assess two projects. The first one is the contract supply service. Second one is installation of the meat processing plant. You have to ensure you cover all that is required to get good grades. So don't miss out on any requirements. So that's all for today. Today we talked about what the financial data analysis is, how you find the requirements. We also talked about how you know if it is financial data analysis or not. Then I explained techniques, where I explained that there's no one way, there's so many ways. So you have to be open, revise your notes, read everything again. Do you understand? And the common pitfalls. So in the next class, we're looking at a practical example of how a financial data analysis should be written in your report. Today's class is basically a continuation of the former class. In the previous class, we did an introduction. I explained everything to you. We did basically lay the foundation. That's just the summary. Please don't neglect the introductory video. Please watch it because it's going to help you a lot. Foundation is very, very good in everything. Do you understand? So without much ado, let's dive into today's video. So like I said earlier, today we're talking about financial data analysis, but we'll be taking a practical example and it's a continuation of the previous class, right? So we'll be using November 2019 to explain or be talking about it, and we're going to be doing the practical example on November 2019 night as well. So I this is the requirement two. We have discussed all about it in the previous video. We're just going to be doing practical here, right? So this was what we're given. An assessment, we're asked to do an assessment of the contract supply service as contained in exhibits 10 and 11. And we're also required to critically evaluate the proposed strategic business opportunity in installation of meat processing plant by DFFP, which is Detoy Farm and Farm Products, right, as contained in Exhibit 12, and discuss broader commercial and ethical considerations as well as risks that may be associated with accepting or venturing into these business proposals. Like I said, when we're talking about financial statement analysis, please, if you have not watched that video, please watch it as well because it's very, very important. Financial statement analysis is 32 marks. Financial data analysis is also 32 marks. So please, those two classes. And executive summary, if you have not watched my video in executive summary, please do that. Those three topics, those three sections, the every section matters. Let's clarify that, right? But you see, executive summary is 20 marks. Financial statement analysis is 32 marks and financial data analysis is 32 marks. So please, those three sections, please don't joke with it. Take it very, very like take it personal. So if you have not watched those videos, please ensure you watch. It's going to help you a lot. So the first thing I said was when you have a requirement, first of all, what do what? Write out your requirements. That's the first step. Because so you will not miss marks that you could have just gotten cheaply. Do you understand? Marks that you could have just gotten without stress, right? So write out your requirements. What are the requirements? What are they asking you to do? So in this case, they told us to assess the contract supply service and they told us to assess the proposed business opportunity, which is the installation of the meat processing plants, right? And the reason why you are actually writing out this requirement so that when you are actually preparing your report, you wouldn't okay, you can even tick it off. Okay, I've done this. You understand? I've also done this. Now, this is requirements two. But then this is like requirements two and three. Because in requirement two, we are doing two different things. We are looking at two different projects, right? So that you wouldn't be able to, you won't mix them up, you won't forget some things. And when you are wrapping up and doing your final touches and you're crossing your T's, dotting your I's, you'll be able to check your list, just like you have what your audit checklists, right? That's for this one. Let's not go into that. But you have like a list of things that you're supposed to do. So as you're taking them off the list, you'll be able to know what and what you have not done and what you are actually done, what you have done and what you have not done, right? So writing all these requirements will guide you and you will not miss out on any requirement. So that's just basically the reason why you're writing requirement. Nobody's going to mark it. It's just basically for you. So first of all, we have to coin a heading. Abby, we have to coin a heading from the combination of all these requirements. So this is the requirement, right? So let's coin a heading from it. And I coined one. I said the assessment of the contract supply service and installation of the meat processing plant. Because we're assessing the what? The contract supply service. And we're assessing the what? The proposed business opportunity, which is the installation of the meat processing plant. So we're assessing both the contract supply service and the installation of the meat processing plant. So we can just merge that two together and then bring make it into one, combine it together and then just form a particular heading. So you have the assessment of the contract supply service, pardon me, and the installation of the meat processing plant, right? So you can use any other heading, like I said, any other heading. This not even not it's not necessary that you write the requirement and then you follow through, but it's just a good way because there's a lot of tension. You have so many things to do. You cannot just be spending 20 minutes thinking of a particular suitable heading. So that's just a very good way to coin a heading. So just ensure that it's encompassing in that sense. It covers all requirements. So since we have talked about the introductory part, let's just dive into how it looks. So this is how you start your financial data analysis. So you start with a heading. And I've said the heading is the assessment of the contract supply service and the solution of the meat processing plant. Then you can just give a little introduction. Here you have the contract supply service from a retail store, the shop, and the solution of the meat processing plant of GFFP. You can decide to write this out. Detoy Farm and Farms product. That's the name of the client, right? That's the name of the client that we're told, the client that we're actually considering. Detoy Farm and Farm Products Limited were evaluated. You understand? Were the two contracts that were evaluated. So you can just give a small heading, write whatever you want to write, but don't waste time, please. So when I did my own, I used heading by heading. You may not necessarily do heading by heading. I can just do paragraph by paragraph. But I just decided to do heading by heading just to make it look neat, right? But like I said, any method you are using, just ensure you are fast. You are fast. Ican exam is not just only about how much you read or how much you know, how much you have crammed. It's about you being smart as well, making right decisions, right? And decisions as to how you can manage time too is actually very, very important. So contract supply service. So the analysis of the terms of the contract revealed that some unfavorable clauses need to be evaluated. Some unfavorable clauses needs to be re-evaluated. So assessing the contract now, there are some clauses that are there that will need to reevaluate because the so many there's so many uncertainties around the contracts. We're not really told word for word what the revenue is. We're not really told word for word what the cost to be, so many terms needs to be evaluated because there's so many unfavorable clauses. Do you understand? So they need to be evaluated. The cost and revenue cannot be holistically computed as not all costs have been accounted for. Now we're actually considering a contract. We didn't even consider all the costs. We didn't consider. Fine, there's some costs that along the way we may not be able to. We may not know that they will actually we may actually incur the costs at the beginning of the project or the contract. But as time goes on, we would actually incur them. Now those ones that we have a miscellaneous expense like section or something. Basically, any miscellaneous expenses or anything that we don't consider, let's just put them there. But we don't have anything like that. We don't really have. There's so many things that we didn't even consider. So there's so many unfavorable clauses. So the contract itself needs to be re-evaluated. The mode of operation of the shop is highly questionable and unethical. Remember that when we're now, let's go back to the requirements. Let me show you something here. We're asked to do what discuss broader commercial and ethical considerations, as well as the risk that may be associated with accepting or venturing into this project. So you are supposed to discuss the commercial and ethical considerations and also the risk. I mean, to don't forget to also do that as well. So now, the mode of operation of the shop is highly questionable and unethical, especially the repackaging of especially the labeling of DFFPs locally. Let's put as DFFPs locally locally produced goods as imported. So we were told that DFFP is actually repackaging their locally produced goods and they are calling it imported goods. So this is an unethical behavior, right? I know we're told to look at rather, pardon me, we're told to look at the unethical consideration. We're supposed to consider unethical behaviors and all of that, commercial risk and all of that. So this is actually very, very highly questionable and unethical because why would they be packaging like now you produced bread in Nigeria, you now package it, you now say made from India. Like that's totally unethical, right? It's totally questionable. Why would they do something like that? They're deceiving people. Yes, that's the thing. And it's unethical. That's against business policies and everything. And the repackaging of unsold goods, DFFP self, they're not without blame or without what's the English now we're going to use? They're not without scolding, but I have to scold them as well. Because they too, the unsold goods, they're repackaging it for resale as fresh goods. Let's say fish. Let's see. Let's not even say fish because fish is highly perishable, right? So let's say they are making eggs. You know, they're doing DFFP. That's Detoy Farm and Farm Products. I know a farm products is poultry, right? And eggs is like poultry. So let's say eggs now. Eggs that they didn't probably the chicken actually they process the eggs and everything on Monday and nobody they have sold everything on sold goods as at Friday. As at the end of close of work rather, as at the close of work on Friday, they now repackage that say fresh eggs, and they put it. Is it fresh? The eggs that almost 5 days ago. Do you understand? They're repackaging it and they are selling it as fresh. Nobody's telling you don't resell your product. Nobody's telling you throw away your eggs. But why are you deceiving people? Why are you telling people that it's fresh when it's actually not fresh? So all these things are questionable. All these things are unethical, and there's also a risk. This is also risky because if the customers discover, remember they told us that we should actually consider the risk that is associated with this product, right? This is actually very, very risky because if the customers discover that DFFP, that's digital farm and farm products, they're repackaging unsold, unfresh goods, and they're calling it fresh, they can switch to substitutes, they can switch to competitors, and the reputation of the company can be affected because if people start carrying it around, blogs start carrying it along that, oh, DFFP, they're into this kind of unethical behavior, it can affect their reputation. So venturing into this business, they actually have to consider all this risk because and all this unethical behavior. So that's not so now you have actually addressed, they have analyzed the contract. But in this case, now we cannot really determine so many things about the contract because they didn't really give us so many figures. I said in my previous video that as an accountant, you are allowed to make realistic assumptions, right? But in a situation whereby they know that you don't even have so many figures, it's a different thing that you're making assumption, like I explained that if you determine that okay, probably net present value is the most appropriate tool that you should use, or they even tell you there that analyze this using net present value, and you have outflows, you have inflows, you have scrap value, you have working capital, you won't have number of years, but you don't have cost of capital. Like you need to say, okay, oh, assuming a cost of capital of 10%. Let's say you have every other thing, you don't have years. You can say assuming that number of years of the contract is 5 years. Now it's a different thing than assuming just a little, yes, I'm just chipping in something. But now you don't have outflow, you don't have inflow, you don't have scrap value, you don't have almost everything. How do you know what to start assuming? That is an example of this contract supply service. They did not basically just give us information that we could not really compute. So we cannot really ascertain, okay, go for this project. So in this case, that they have to sit down, reevaluate the project, reassess the project again. Even the unethical behavior they're even doing is just everything just looking all wobbly wobbly. So they have to actually sit down and actually look at this thing again. Do you understand? So that's what so we have actually addressed the question, and we also looked at the commercial, the ethical terms, the risk and everything. We also considered this here. So the second contract or second proposal now is the installation of the meat processing plant. In this case, now we're giving data. We could calculate, we could compute, right? So the installation of the meat processing plant was appraised using the net present value. So tell us what was the tool you used. That's the first thing. What was the financial tool you used? Now we didn't talk about any financial tool when we we're looking at the contract supply service. Like I said earlier, they didn't give us information. So we told them go back and reevaluate. Do you understand? Now, but in this case now, so look at what is the what? The tool, the tool that was used to appraise. Talk about it. So now that's the first thing. What is the tool that was used to appraise? In this case, now it was net present value. Then what did you determine? I mean now, what was now the expected revenue was computed using probabilities, and the revenue amounted to 27.75 million. So what those that data that was given, what did you actually determine? Now we calculated an expected value because no when you have the figures you have estimates, you have probabilities. If you multiply the probabilities by the estimates, right, you have a what expected value. And now in this case now we have expected revenue of 27.75 million. The negative net present value now after computation, after looking at the outflow, the inflow, the scrap, everything, we saw that we have a what? We have a negative net present value. Now, the negative net present value indicates that the proposed project is not viable, and DFFP should not that we did not just jump to say DFFP don't undertake this project. We explain why. Because what the project has a negative net present value, which indicates that it is not viable. So the company should do what? They should not undertake it. However, no conclusion has been reached on this. Now, you are talking about what? The risk, I should say, you're talking about the negative side. So, like I said earlier, don't just be one way. Look, it should not be accepted, but how about the other way? Now, however, no conclusion has been reached on this because the reliability of the probabilities that were used to determine the expected value is questionable. So there's high possibility that the project will eventually be viable. Do you understand? It may actually be viable. It may actually have a positive NPV. Probably if they review the what? if they review the next present value, if they review the probabilities, pardon me. So they're using probabilities. That means it's still wobbly wobbly. I'm using the word wobbly wobbly, right? So wobbly wobbly is like how will I explain? It's even an English word. It's basically still shaking. It's not certain. In that sense, it's not certain because we cannot really come to a conclusion that okay, this is the final year and aiming because we're using probabilities and probability is a game of chance, 0 or 1, right? So they actually need to still have it that okay, let's still wait. Fine, as of now, analyzing the project using the probabilities that we're given, it is not viable. But the company should still consider actually checking other them reassessing the probabilities, or probably even if the carbon actually gets the revenue or reassessing the revenue in that sense, the project can actually become viable. So now that's just it. So we're looking at the two sides. Then after you talk about that, you conclude there are so many uncertainties. There are so many uncertainties in the contract supply. Therefore, the contract needs to be assessed, reassessed. Abino, they need to reassess it. Just like we said earlier, they need to reassess it. They need to the unethical behavior of the shop and the FFP also needs to be addressed. They need to address the unethical behavior. That thing they're doing is not good. The meat processing plant is not viable as it shows the negative present value. However, a revaluation of the probabilities used to compute the revenue derived from the installation of meat, uh, the revenue derived. However, a re-evaluation of the probabilities used to compute the revenue derived from the installation of meat processing plants can make the project viable. So we're telling them that they should consider the probabilities. Probably it's the probabilities that is actually making the project not to be viable. So we're looking at both sides, the positive and the negative in that sense. And you give recommendations. So this is just an example. Okay, what do you recommend? Now the first thing is that the contract supply terms should be reassessed. I mean, now they should reassess the contract supply terms. So you're telling them, I recommend though, you guys need to reassess this your contract supply terms because it's not really looking okay. They can tell them to the management of GFFP to address the packaging of unsold item. It's not good. It's an unethical behavior. Fine, they may not be able to control um other people. Do you understand? But they should try and reassess the repackaging of the unsold items, the unsold items. And DFFP is our client, and we can talk to DFFP. Do you understand? So we can tell DFFP, you guys should reassess it too. But we might not necessarily be able to control the shop, which is the person that our client is trying to consider because those ones are like, oh, we don't have it. The shop did not come to meet us. So we cannot really recommend to them in that sense. It's not as if you recommend to them is a bad thing, no, but we are concerned about our clients. So we're giving recommendations to our clients. We are concerned about our clients' well-being. If other people want to be unethical, but our clients, we're concerned about them. But not that if you recommend for them to is a bad thing or something. But let's just focus on our clients because that's the person that's going to pay us money. In that sense, do you get? So the installation of the meat processing plant should not be accepted because because it gives a what a negative net present value, right? The revaluation of the probabilities used to compute the revenue from the installation of the meat processing plant. So there should be a revaluation. They should reevaluate it, right? They should reevaluate it. So these are just recommendations. There are other things I cannot do. So this is just basically let me zoom in so that you can see how it's I'll be zoom out rather. Let me zoom out so that you can see how it looks. So this is how it looks. You have a heading, right? Then can also listen introduction. Then the first requirement, talk about it. The second requirement, talk about it. Then give a conclusion, recommendations. You can talk story. Your own does not have to be as short as this. So, but this just I'm just giving you a sample of how it looks. So this is your financial data analysis. This is how it looks. Then you conclude, and you give recommendations. So basically, that's all I have for today. Today we're going to be talking about strategic and operational analysis. Unfortunately, many people don't take note of this operational analysis aspect. People just only talk about the strategic. But today I'm going to be revealing that to you. So we have the strategic, the tactical, and the operational management. Those are the three levels of management in descending order. So the first one you have is the strategic management. So the strategic management or the strategic managers are the managers that are involved in the long-term running of the business. The tactical managers are the middle level managers, that the ones that execute the tasks given by or set out or laid down by the strategic managers. The final one you have is the operational managers. The operational managers are the managers that are involved in the day-to-day running of the company. They're the ones that do the day-to-day runs and all of that. So with that being said, we can now link it to operational and strategic analysis. Operational analysis is the analysis of the operational issues in the company. That is the day-to-day issues in the company. So just like the operational managers that are involved in the day-to-day running of the company, operational analysis also involves day-to-day issues. So in this case now, unlike the financial statement analysis where we're analyzing a financial statement, or financial data analysis where we're analyzing a contract, project, or a proposal, in this case, under operational analysis, what we're dealing with is analyzing the day-to-day issues, operational issues that affect the day-to-day operations of the company. Number one, limiting factor. So you could have a question or a requirement that covers limiting factor. You can check out May 2024 diet. I actually created a video on May 2024 diet. You can just check that out. I'll put the link to the video in the description box. You can go and watch it out. So limiting factor is actually part of Ican case study. Did you know? Did you know? Did you know? Now you know. Because a lot of people don't know. Actually, people actually think that it's only in performance management, but yes, it's actually part of case study syllabus. So now you know. So if you want to learn how to answer questions that could be tested or limiting factor, you can check out that video. Check the description of this video. I actually linked it out, or go and check my channel. I actually solved the May 2024 diets. You can check that out, the tested limiting factor there. Another thing again that the operational analysis could cover is something relating to a business opportunity that could affect future activities. So they could tell you that, oh, there's a business opportunity that could probably affect day-to-day operations, day-to-day running of the company, something that affects future activities and all of that. So another operational analysis, or another question that could cover operational analysis, could be something relating to a company's interaction with its customers, interaction with its suppliers. Don't worry, I'm going to give you some of the examples so that you would know how to deal with questions like that. So, but the May 2024 diet, where this was recently tested, I solved that. You can check that out. So these are some of the things, or some of the type of requirements that operational analysis could cover. Strategic analysis is the analysis of the long-term issues in the company using models in order to assess the strengths and weaknesses of a company and address or advise on areas of improvement. So in this case now, what you are doing is that you are using models to assess long-term issues. So unlike operational analysis, where we're only dealing with day-to-day issues that are related to day-to-day operations of the company, in this case now, we are more focused on long-term issues that are affecting the company. And in this case now, we're trying to check, okay, what are the areas that could be improved? What are the weaknesses? What are the strengths in this company? And in this case, in strategic analysis, we're not doing limiting factor and the likes like we did under operational analysis. In this case, we're actually using models. So this is where you have use of models like SWOT analysis, Porter's 5 forces model, pestle analysis, Ansoff product matrix, and all of that. And this was also tested recently in May 2024 diet. That same one I said, like I told you earlier, where they tested operational analysis. So I've solved it. You can check my channel or check the description for the video so that you can have an idea in case they decide to test it again this May 2025 diet. You will be ready. Besides just assessing the weakness and strengths of a company by using models, it also involves you assessing the wider context. So in this case now, wider context is just saying that you are assessing the external environment. Wider context is just saying something that is wider than the coverage or wider than the scope of the company. And that case, in summary, don't confuse yourself. Wider context is just basically talking about the external environments, talking about the industry where the company operates. You understand? So in this case now, when you're doing strategic analysis, you're going to be considering the wider context. You're going to be considering things that are happening in the industry. Take for instance, you're using person analysis. They ask you to use person analysis. So person analysis, under person analysis, P stands for political environment. So political environment is actually outside the company. It's not under the control of the company, because the company cannot control what the government policies would be and all of that. So that is an example of a wider context. It's an example of things that are operating in the outside the external environment of a company. Strategic analysis does not only cover external environment though, it also covers internal environment. Like now, for instance, your SWOT analysis now, S and W stands for, it covers the internal, while O and C covers the external environment. So strategic analysis does not just only cover the industry, the external environment, the wider context, it also covers the internal environment in which the company operates, as the inside of the company. So in summary, we can say that strategic analysis covers both internal and external environments. But in this case now, we are considering the long-term activities of a company and we're using models to assess them. So most times, in most case studies, people are actually used to models, and they're not really used to limiting factor. And that was why in May 2024 diet, where limiting factor was tested, it was like, oh my god, limiting factor. A lot of people were not expecting it at all, because some people don't even know it's part of Ican syllabus. So please, if you have not read the study pack, go and read it. Don't let the person meet you without you finishing that study pack. It's going to help you. It's going to open your mind to a lot of things that you did not even know. Under operational analysis, you could have a requirement that, like I said earlier, a requirement that covers limiting factor. They could tell you that, okay, this company has a limited resource. How do we allocate it such that will make the highest contribution and would produce in such a way that would benefit us, blah blah blah, and all of that. So limiting factor could be a possible requirement you could see, and that's when you see that kind of requirement, you know that that is a requirement that covers operational analysis. They could also tell you to assess the inventory management of a company. So you remember that we said that operational analysis actually covers the interactions of the company with its customers and its suppliers. So they could tell you something about inventory management, or how do we produce, how do we collect goods from our suppliers, when should we restore buffer stock, all of that, when should we order reorder level and all of that. So it's possible they could test something like that too, because it actually would affect their relationship with their customers, or rather their suppliers. And it could also tell you something about customer service, something that will actually affect their customers. When you see something like that, you're not like, oh, this is not under case study. It's actually under case study syllabus, but it's not usually tested like that. So, but still try to read on it in case they decide to test it. So under this strategic analysis, possible requirements could be a requirement that would tell you to use a model to assess the company. Like for instance, the most recent diet where it was tested was May 2024 diet, like I earlier mentioned. And in that diet, they were asked to use answer product matrix to assess their sales strategies and also tell them how they can achieve their two strategic objectives. So I solved that question. You can check it out so you understand what I'm saying. So they could also tell you to do something like that as well in this diet. So just try as much as possible to read it. So go to Ican study pack. In the study pack, they actually talked about some models, they explained it. So just try as much as possible to study it before the precinct comes out, because May 2024 diet, unfortunately, there was no hints that they were going to test models. So this was like a shock to a lot of students. So don't let that be you. Try as much as possible to read it. So even if they don't test it, it's better to be over prepared than to be under prepared. So this is basically how the questions on operational and strategic analysis could come. And if you want to see practical examples, just like I've said like 3 or 4 times, just check my channel where I explained on the question on May 2024 diet. I'll put the link in the description. You can check my channel as well for it. So that's basically all about strategic and operational analysis. So in summary, operational analysis is the analysis of the day-to-day issues of the company, operational issues, while strategic analysis is the analysis of the long-term issues of a company using models. Number 1, not knowing that something like limiting factor is under case study syllabus, because a lot of people don't know that limiting factor is under case study syllabus. So please go back to your performance management texts now, download it today. Don't let today pass. Download it today. This is weekend, Easter weekend. You have time. Download it today. Go back to your performance management pack in skills level and study limiting factor, because it's actually under case study syllabus. If they test it, good. If they don't, good. You are still over prepared. It's better to be over than under prepared. And that mistake people make is thinking models is part of every case study question is a lie. Not examiners have put it in common pitfalls time and time again. That people did SWOT analysis when it was not tested. If the examiner wants you to do anything relating to model, they will tell you that, because a lot of people ask, how would I know if I'm going to do model or not? Since examiners are always complaining, how do I know? If they want you to do it, they will tell you. They will specify it there. Go and check May 2024 diets. That's like the most recent year where they asked or tested it. They will tell you there. They will tell you using so models, using this model, using that model. They will tell you there. So don't just assume. So do it only when they ask you to do it. So these are basic the major mistakes that people make, and that's all about operational strategic analysis. We're told to what evaluate the viability of the proposed introduction of the diabetic chocolate into the market based on its financial details, and recommend the quantity of the product that should be sold, produced and sold in the first 3 months. In addition, using the ANSOF product matrix, market growth matrix, evaluate the extent to which spicy sales development strategies could assist in achieving the two strategic objectives. So what are they saying here? So basically, Spicy Confectionery Limited wants to introduce a new product, and the product is the diabetic chocolate, the chocolate for diabetic patients. So what they're asking us to do, they gave us some information, some financial information. So what they're telling us to do is that we should what assess, I should evaluate that information, and then tell them, okay, oh, how much should we produce? How many boxes of that diabetic chocolate should we produce in the first 3 months? Produce and sell in the first 3 months of it being introduced into the market. So we're going to look at, based on the financial information that they gave to us, we are going to use it to determine the quantity that should be produced and the quantity that should be sold. And also look at the viability, because they're not just here to for charity. This is a business that is out to make profits. So we're going to have to what look at the viability of this particular proposal. And aside that, we're also told to what use the ANSOFT products matrix. The ANSOFT products matrix to also evaluate the sales development strategies that could assist Spicy in achieving its two strategic objectives. So, in the pre-seen and further in the unseen, they emphasize the two strategic objectives of Spicy Confectionery Limited. So, we're going to be using Ansoft's product market growth matrix to actually assess the extent to which their sales development strategies would help them to achieve those two objectives that they laid out for themselves. All right, so this is actually the report. But before we look at the report, let's go to the appendix section, the workings, so that you would understand what I'm saying. All right, so like I said earlier, we have actually looked at the question in our question review class. That's the first class. If you have not watched that video, please watch that video first. But I just brought out some parts of that particular from the question so that at least you will see. So now, concerning the introduction of the diabetic chocolates, we're informed. This was the financial information we're giving. So we're giving three products. We have the diabetic chocolate, that's new product that they want to introduce. We have the low sugar chocolate and the honeybee chocolate. So these are the three products that we have currently, and we're giving the selling price. We're giving the variable cost, direct material, direct labor, variable overhead, corporate overhead. Now, as a chartered accountant or as a proposed or an incoming chartered accountant, when you see variable overhead, you are seeing corporate overhead. What does that tell you? Okay, before I answer, try before you listen to the answer, drop something in the comment section. Let me see. Try. I know that I'll still explain, but let me just give you like 2 seconds. Quickly pause this video and type what you think this variable overhead and corporate overhead is trying to tell you. All right, so well, now that you have made your attempt to the comment section, I hope you did. Please help yourself. Try to just say something. All right, so what is this telling us? Now you have variable overhead, you have corporate overhead. First of all, what is corporate overhead? Now, corporate overheads are like indirect costs that are basically for administration. Indirect costs that are basically for management. Yes, management and administration of the company that are used for basically the management administration, like something like rent now, for instance, you understand. So now corporate overhead is not directly traceable to a particular product because corporate overhead is an indirect cost. You understand? Think of it like a fixed cost because it is corporate overhead is a subcategory of general overheads. You understand? So corporate overheads are not directly traceable. So I'm giving you idea, they're not directly traceable, and the cost that we consider are costs that are directly traceable. What is that telling you? Let me just tell you the answer. Basically, we're talking about relevant costs because what are relevant costs? Relevant costs are costs that are directly traceable to a particular product. And when you are considering or when you are analyzing a product or you're analyzing a particular thing or you're assessing it, you only consider the relevant costs. That's the costs that are directly traceable. So, what do we mean by costs that are directly traceable? Let me break it down a bit further. Now, for instance, I want to produce a like okay, let's say for my books now. Let's say I have three books currently. So let's say I want to produce one of my books, and the book that I have, I incurred, of course, the cost that I would definitely incur. I will incur cost on paper. I will incur cost on printing. I will incur probably costs for um what can I say? Cost on paper and printing. Let's just keep it simple. Cost on paper and printing to actually print those books, right? Good. Now, let's say I had to, because I wanted to print by myself, I rented a whole building for my printing company. Now, that rent that I incurred is a cost that I actually incurred, yes, because of that particular reason. So if by tomorrow I decide I'm not more printing books again, will I incur that cost again? No. So that cost is relevant because that cost is basically for that purpose. So now why am I saying? Because some people believe that every rent is not relevant. No, that's not true. Some rents are actually relevant. Once that rent is as a result of that decision to print is relevant. But peradventure, let's say inside my house, I want to use the corner of my sitting room to print. Will I not tell my landlord if I don't print this month? Will I tell my landlord, landlord, oh, I did not print this year. Oh, that means you cannot collect. He will collect his rent because this is his business. The reason why you actually rented that building or rented that purpose or yeah, you were living in that house was not necessarily because of printing. So what's the business of the landlord? Whether or they're telling NEPA, NEPA, please, I was not at home for 6 months, so don't bring NEPA bill for 6 months. What's their business? They will bring the NEPA bill because that one is just like fixed, you must pay. So costs like that now, for instance, now they are basically for management and administration. Costs that are just for management, costs that are just for administration, those are corporate overheads. They are not as a result of that decision, so you cannot include it. It is not a relevant cost. So now the only relevant costs that we have here now are direct labor, material, direct material, variable overhead. Because this overhead, now why we consider variable overhead? Because variable overhead, when you hear something is variable, that means what? It changes as per the quantity. You understand? So that one is relevant, but corporate overhead is not relevant because it's just basically for management and administration. I hope that was able you're able to get that analogy. Now we're told further that there's a temporary storage of material C. Now, don't forget that in this case, we have three materials, material A, B, and C. Now, for this material C now, we have temporary storage. And the management of spicy, they are aware that there will be a temporary storage for the first 3 months. I remember that in the requirements, we're told that we should tell them how much they should produce and sell for the first 3 months. So for the first 3 months, there will be a temporary shortage of material C. And then the material C will only be 6,500. We only have 6,500 kg of material C in each month. That means month one, 6,005, month two, 6,005, month three, 6,005. And then this material C now, they're taking it from southwest. Do you understand? They're taking it from southwest part of the country, and then there's a lot of insecurities, and then they don't have any other material they can use to replace because you could have advised them now by force, must you use material C, use and that's it now, Abby. But now they don't have any substitutes. And aside that, they don't have inventories as well. You understand? So this is something that we can talk about. So what's this telling you? Can you try? Yes, there's a limited resource. There's a scarce resource. So once what's bell is that ringing? Yeah, exactly. That is what a limiting factor. So now I used to tell you always, please, when you're doing case study, you don't do I'm a one man mopo because there's so much to know. Case studies, I used to say it a lot, is the umbrella that houses every other course on the ICANN syllabus. Now, limiting factor is a topic in performance management, and performance management is a course under what? Under your skills level. Now, you need that knowledge of performance management here. You understand? So you have to read wide, you have to read far, and that's the reason why you need people. Go solo, don't go solo. Have a team of people. At least you hear from here, from here, from here, from here. Before you know all that information, you gather it together, and it helps a lot in the examination hall. You understand? So I'm going to be using that particular knowledge, and I say that, but performance management is not really under. Okay, sorry, they don't want to know. They will believe that having not done it during the course of your ICANN journey, you should know it. God help us. Amen. All right. So we're told about we get they give us information about the order. You understand? So they told us that for city supermarkets, they're going to order 10,000 boxes of chocolates, the low sugar chocolate, and Derago would order 10,000 of the honeybee. Then for the diabetic chocolates, which is the new product, this is still a projection. You understand? And when you have projection, what does that tell you? Please and please, we have to do what they call what's the word now, professional skepticism. I tell you a lot. I used to tell you almost every time. If you watch my videos, I emphasize that the professional skepticism is the gold mine of ICANN case study. You, as a professional accountant, you cannot take everything they tell you hook, line, and sinker. You cannot say yes, 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 yes. Question it, but question reasonable and professionally. Now you're looking at a projection. You already know that professional skepticism here is what the viability of this projection, is it actually reliable? That's something you can include in your report. Now, a survey conducted said that what? That they'll sell 10,000 to 15,000 per month. What if they don't? We don't know. All right, so now, first off, that's the question, right? What do we now need to do? We already analyzed this. We already know that the first thing we now have to get is our contribution. I mean now, and we already said that contribution actually is what's the difference between contribution and profit. Now, if you look at this now, let's go back up a bit. All right, so here now we're giving operating profits. We could have just used our profits straight up, but we cannot use our profit straight up. Why? Because profit is not a viable or a reliable measure for making decisions or analysis. Why? Because profit includes every cost, including fixed costs, general overhead, corporate overhead, and the likes. That's why we use contribution. Contribution only considers the sales and the relevant cost. That's variable cost, the sales and the relevant cost. So that's why contribution is much more preferred than operating profit. So in some, what just trying to say now is that we should look at the sales and the variable cost. So you're going to have to use contribution instead of that profit. So you're going to adjust that profit to get contribution. Look at what I'm trying to say. Now, sales minus variable cost now, or you can also call this one, you can say this one is relevant cost. Now, what is our variable cost now? Our variable cost is the direct labor, material A, material B, material C, and variable overhead. So we'll just bring it down here. Direct labor, material A, B, C, and variable overhead. So this is our total variable cost. The corporate overhead, we will not consider it. We have explained that in detail. Let's not waste time. Let's just go further. So now, to get our contribution now, our contribution, like we said, is what? The sales minus variable cost. And I explained that variable cost considers the relevant cost. So that's the reason why we are only considering the variable cost. All right, so sales minus the variable cost that we considered here will give us our contribution per box. Contribution per box. All right, so now the question asked us to what? Determine the quantity they should produce and the quantity they should sell in the first 3 months. So now what's the recommended quantity? Now we're told that there will be temporary storage of material C for the first 3 months. And we've been able to emphasize that we have a limiting factor. And the limiting factor here is what? Material C. Material C, because we have shortage, we have scarce supply. All right, and the maximum quantity that we can get per month is 6,500 kg per month. 6,500 kg per month. So that's the maximum we can get. So now, how do we now allocate this? So since it's a limiting factor now, so let me explain how limiting factor works. Although it's a performance management topic and we should not go deep, but let me just explain how it works. So look at it now from this example now. I'm going to use my example again. I have three books, right? All right. So let's say for instance, I need 2 packs of paper to print the required number of books I need to sell per month. I need two reams, yeah, 2 reams of paper. Let's say I need 2 reams of paper to print the required number of books I need per month. I need 2 reams of paper. But let's say something that happened. Maybe there's corona. Let's use that good example. During corona period, my supplier could not come to my house. He could not bring 2 reams of paper. I only had one left at home. And I still needed to print. I mean, now, if you were in my shoe, what will you do? Let's think about it. I have 3 books. You understand? So let's say let's use small figures. One is 100 naira, one is 200 naira, one is 300 naira. And that means which one is giving me more income? The one of 300 naira. But as an accountant, you cannot just make decisions like that. You cannot just say the one of 300 naira, go and print it. No. You assess it. Okay. The one of 300 naira, right, is one giving us highest contribution. Fine, no problem. But which one are people buying more? Because now, if it's that the one of 300 naira is giving me more profits, right? And people only buy one per month. But the one of 200 naira, people buy 10 per month. So instead of printing the one of 300 naira, where I will get 300 naira, where somebody will buy one, I rather what print the one of 200 naira, where I'll get 10. So all I'm just saying is that you don't just look at the contribution alone. You have to look at the contribution as per this limiting factor. How can I make the maximum? Which one will give me the maximum profit? 5 years contribution, no problem. That's the first thing we'll look at. But in terms of this limiting factor, in terms of this one ream of paper that I have, which one will give me highest profit? Which one will I gain more? Hmm. Yeah, it is humming, Nabi. You're getting what I'm saying, right? Good. You understand? So now that's the reason why you have to do contribution per limiting factor. So I will now look at it. Okay, based on these 3 books I have, book A, book B, book C, I've calculated the contribution. I've seen that okay, one book is giving me 300 naira, it's giving me the highest contribution. Perfecto. Now, concerning that now, as per the limiting factor, which one will give me the highest too, considering the shortage I have? Do you understand? Which one will give me the highest income? So that's the one I will produce first. So once I finish producing all the one of 200 naira, if there's remaining paper, which one will I go for? The one that will give me the next highest profit, either the one of 100 naira or the one of 300 naira, right? So the one that will give me the next highest profit, I'll print. And if there is no paper remaining for the remaining I will not print anything again because I've gotten my profits. You understand what I'm saying? So that's why you have to watch. You now rank them. I say, okay, this one is giving me higher, this one is number one, this one is number two, this one is number three. You rank them based on the contribution it's giving you as per that limiting factor. And then you allocate your resources. You say, okay, for the highest contribution, how many paper does it need? Take, let's finish printing down. We'll print everything of that one that we need. Then if there's any remainder, Abi, we will now consider other one, the next highest. That's the second position. And if it finishes there, bye bye. If it's still remaining, perfect. The remaining small paper left to use to print the third one. Do you get what I'm saying? So now let's now look at it concerning in this light. In this light now. Now, okay, I trust the Holy Spirit to help us to actually digest this because I said that the reason for creating this video is to help all those that had issues to know, okay, where was the problem, how they solve the problem, so the next diet you will not fall, you will not be a victim of that again. All right, so contribution per limiting factor. Now I've calculated the contribution. So contribution per limiting factor is a contribution divided by the limiting factor. Now, first of all, we have to consider, okay, what is the quantity of material C required by each product? Now, what is the quantity of material C? Now, each product requires how many of material C? Let's go back to that question. Now, material C, look at material C. Material C is 10 naira per kg. But for diabetic chocolate is 5 naira, 1 naira, 3 naira. So now if is that, so now let me ask you a question. If I say, okay, I want to buy biscuits of 15 naira, and one biscuit is 10 naira, how many biscuits will I buy? 5 naira, 5 biscuits, right? I have 15 naira in my hand. I want to buy, and one biscuit costs 10 naira. How many biscuits can I buy? 5. Because 15 naira, 10 naira times 5 will give me 15 naira. And I have 15 naira in my hand. And one biscuit is 10 naira. So I'll get 5 biscuits, right? So that means what? The quantity is 5. So we need the quantity. So that's the reason why, in this particular case, to get the quantity of material required by each product, we do the product's cost 15 naira divided by the price per one, 10 naira, will give us 5 biscuits, something like that. Do you understand? So now the price per kg for material C is 10 naira. So now 5 divided by 10. In this case, now we have 5 naira divided by 10 naira. That means what? 0.5 kg. That means diabetic chocolate is one the quantity of diabetic chocolate is 0.5 kg. Then for low sugar, 0.1, for honeybee, 0.3. I hope that's clear. If you have any question, just ask me in the comment section. I would be there to attend to your question. You understand? So let's move on. So now why did we do this now? We did this because we need, this is the denominator, the limiting factor. So contribution per limiting factor is the limiting factor material C. Okay, so let me put it so that you can understand. Material C in quantity. In quantity. We need it in quantity. But the one we had was in value. So we had to get the quantity. Do you understand? Do you understand? So if you have any question, just ask me in the comment section. I'll be here to attend to your questions. So contribution per limiting factor. Now, contribution per limiting factor, that's contribution over the limiting factor. That's the contribution. No one we calculated the contribution in this particular case. We have 10 naira, 6.25 naira, 7.75 naira. So 10 naira, 6. So you divide it by the quantity that we got here, then you get your contribution per limiting. So as per the limiting factor, now if you look at this now, which one is giving us highest contribution? Diabetic chocolates. Now you will jump, produce diabetic chocolates, right? But now, as per contribution per limiting factor, it's actually low sugar chocolate that's giving us highest contribution. That's why as an accountant, you cannot just jump and make decisions. You have to calm down. Take it easy. Do your analysis. You understand very, very well before you make your final conclusion. Because now, based on the contribution, we'll have just jumped to say diabetic chocolate is number one. But look at it. It's actually number three. It's actually the last as per the limiting factor. Remember that rim of paper analogy I gave, right? Good. All right, so this is the first, this one is 25 second and 23rd. So that means we'll produce low sugar first. Then, if any product is remaining, we'll move to produce honeybee. Then the remainder, or whatever is left, will produce diabetic chocolate. So even though it gives the highest contribution, it still ranks last. So now we're told that what material C, sorry, pardon me, we're told that material C has the limited capacity is 6,500 kg. And now the quantity needed per month. Remember that we're told also that the quantity needed per month is what? 10,000 boxes of low sugar, 10,000 boxes of honeybee, 10 to 15,000 boxes of diabetic chocolate. Remember, right? So now that's the total quantity that they need to supply or the order they have. Now that's the total material, total quantity, total order. Or let's just say total order. Let's just make this total order. Total orders per month. So this is total orders that they have per month. Now, for material C now, how many of material C do they need for one? Now, to make 10,000 boxes of diabetic chocolate, they will need 5,000 kg of material C. Remember how we got this quantity of materials now? This was 0.5, 0.1, 0.3. So now, I trust the Holy Spirit to help us, to give us understanding. Now, to make, now how many of material C do they need? Now, we know that, okay, you people want to make 10,000 boxes of diabetes, 10,000 to 15,000 boxes of diabetes chocolate, 10,000 of each of low sugar and honeybee. Now, for that limited resource that we have, How many kg do you need per one? Because now we only have 6,500. Now this one now needs what? 5,000. This one needs 1,000. This one needs 3,000. If you add all this together, how many do you have? That's 5,000 plus 1,000, 6,000. 6,000 plus 3,000, 9,000. And we have what? 6,500. So we are short already. You understand? We don't have enough. We don't have enough capacity. Because if we are saying that we need 6,000 and we have 6,500 and we need 9,000, so we're short by about 2,500. You understand? We are short. We don't have short. We have, so we cannot supply everything. But we know that this low sugar will collect 1,000. Even before we even look at that, let's even look at this thing. Now, this one is one. This one, no, nobody that low sugar was number one. This one is 1,000. Know that that's the first one. Will supply everything. Now, if it out of 6,500, if we remove 1,000, how many will be left? 5,500. Honeybee needs how many? 3,000. I know that we have 5,500 left, right? So let's even look at the calculation here so that you understand what I'm saying. So now, ranking now. This is the low sugar is the first position. Remember that we did the ranking here. This ranking. I just copied it and pasted it here. So low sugar is number one, honeybee is number two, diabetic is number three. Right? So this one needs 10,000 to 15,000. So they may even need more than 5,000 self. They may even need up to 7,500. Oh, 5,000 alone self. We don't have the capacity to fulfill it. So now, what will allocate to the first one? Right? So first position that needs 1,000. If you remove 1,000 out of the 6,500, how many will be left? 5,500. All right. So do we still have anything left? Yes, we have something left. So let's go to the second position. Second position needs how much? 3,000. Right? Second position needs 3,000. And out of 5,500, what's left? 2,005. Right? So, but the third one, they need the minimum they need, because they told us that between 10,000 to 15,000 boxes, but the minimum they need is 5,000 kg, and we only have 2,500, right? So let's say the quantity of diabetic chocolate they need required 5,000, and we have only 2,005. So how many will we allocate? We'll allocate only 2,005. So the material allocated will be 2,500. So, but this one, the first position got everything because that's one giving us highest contribution per limiting factor. The second position got everything because we had the capacity. You understand? Because that's the second highest. But the third one could not because there was a limited capacity. So do you get now how many boxes? Remember that the question asks us that what we should tell them how many they should produce and sell. How many boxes of diabetic chocolate should they produce and sell? The question did not say according to the shortage of material C, how many of material C can we use to produce? No. The question said what's the quantity we should produce and sell. Now the quantity we should produce and sell in the first 3 months now. Now we know that the only material they can allocate per month is 2,500 kg. They can only allocate 2,500 kg. And we need 0.5 kg per one material. You understand? So the number of boxes that we can produce is only 5,000 boxes. So the number of boxes we can produce and sell per month is what? 5,000 boxes. 5,000 boxes. So we can only produce and sell 5,000 boxes. Do you get? So if you have any question, just let me know in the comment section and I'll be there to attend. They were also told to use answer product master. So this is just the diagram. So in your appendix, just draw the diagram. You don't need to talk story in your appendix. In your appendix, when you're using a model, how this, because no Ican does not, they don't really ask models. So it's like, oh my god, they asked model the first time since the present era started. No problem. Just draw your model in your appendix section, then go to the main reports, and then this is how you do. So let's look at it now together. So have a heading. Marks are given for heading. Please and please and please. Marks are awarded for heading. Please, marks are awarded for heading. Please draw a heading. Draw a heading. Then after doing that, after doing your heading, the next thing, let's have this small letter. The next thing you do, you can just talk about it. Viability of diabetic chocolate was evaluated using contribution. understand, by completing the contribution, and computations are in requirement too. The reason why I did this is because some people that like me that used to forget how I have to do in bracket appendix 2 in bracket appendix 2. You can I must link your appendix to your main report. I always say it all the time. Marks are awarded for that. So you can just put it there. Computations are contained in appendix 2. Calculations are in appendix 2, whatever. Just put it there. You must shall link. Then now tell us what happened. The contribution per box. Remember that we said 10 naira. And now the fact that it's 10 naira is even telling us that it's actually valuable because it's not giving us negative contribution. It's giving us a positive contribution of 10 naira. That means what? It will generate higher, in fact, it will generate higher contribution compared to other products and then contribute to the overall contribution of the company. Then tell us a little about the information. Now, a little, because marks are not awarded for just taking information and dropping it there. Information that they gave you and not telling us and dropping this to make your report lengthy. But in as much as you don't have to copy and paste information, write your report like anybody that does not even see the question, that sees my report, will understand what actually went on. So you give them a little about the information. Okay, temporary storage happened, which is limited to 6,500. Hence, the three products were ranked. You understand? What did you do? Because of the limitation, you now what? The limitation of the boxes, right? Okay. Because of the limitation of the boxes, you did what? You now ranked. The products were ranked according to their contributions, right? Then low sugar we produced first. You know that's what we did. Low sugar we produced first as it contributed the highest contribution of 62 naira 50 kobo. You know, if you don't if you didn't say all competitions are contained in appendix 2, you can just come here and say in brackets appendix appendix 2, but we already said all computations are there, so we don't really need to do appendix. You understand? So then the honey bee with the second one will be what's produced, right? Second highest to be produced. And finally, the one that had the diabetic chocolate would also be produced. You understand? So you're not telling them what you did. Then the total material needed for the diabetic chocolate, because that's what they asked us to do for the first 3 months. For the first 3 months is 0.85. So this will be giving what a total of 5,000 boxes of diabetic chocolate for the first 3 months. For the first 3 months, this was what they actually told us to do for the first 3 months. So we'll talk about it. You don't need to bolding your own, no, don't need to be painting your own in the example. I'm just making this bold so they can see what I'm trying to talk about. Now, don't forget that in the unseen, we're told that there was a problem about spices manufacturing facility being messy and undercover agents. I said agents. An undercover reporter went and saw it, and then they also told us about bromates being used as a preservative, and then NAFDAC was warning them, and also you can talk about that. That's also a professional skepticism and an ethical issue in a way, because in the pre-scene we're told that Spicy is a company that in fact they take environmentally friendly operation very very personal, and now a company that you're saying that environmentally friendly operations are taking personal, you are now that same company that is what in a messy environment, like is contradicting what you're saying. You understand? So a major concern, first of all, no we talk about is when you see projection, the viability of that information, question it. A major concern is the viability of the information used. You understand? Talk about that. Then what? The fact that they claim to be environmentally friendly and then they are not what they're having messy facility. This one is making us to be thinking twice. So are they really saying the truth? So now they must ensure that the manufacturing facility is kept clean at all times. And then the use of bromate too, they have to stop it because what NAFDAC has told them that that's their last warning. And then the answer product matches. We're told to use answer product matches. We drew that in our appendix already. So talk about it a little. Answer product matrix. So this one is in appendix 3. Yep, Appendix 3. So the answer product matrix was used to evaluate the sales. You know, this is what they asked us to do. And the two strategic objective was to expand the range of customers through development of market and product through a wide range of and sales of distribution channels. This was the first one. And the second one was to enhance the CRM, enhance customer experience through CRM. So this was the second one that they gave us too. So they told us that we should what? How does their development strategies actually help us to achieve our objective? The strategy that we use concerning our sales. How is because everything I used to tell you that everything is revolves around the company's objective. So how does that help us to achieve our objective? That was the trying to tell us. Use answer product passage to tell us that okay, how does our sales strategy help us to achieve our objective? Because we are doing strategy. All what we're trying to achieve is what the objectives we have set, our strategic objectives, our long-term objectives. So the first item here is market penetration. Now, market penetration involves what sale of existing product to existing customers or markets. You understand? So through market penetration, they'll be able to achieve the second objective, which is what enhancing customer experience through a strong CRM. You understand? So this is on the condition that they actually have the right product and right location actually. So what are we trying to talk about here? The market penetration is saying that we should go further, we should penetrate more into the market. That means what all those existing products, the products that we had before, all those products that they listed that they were selling before, want to sell it to the existing customers, want to penetrate more. Let's say for instance now, let's say for instance chocolates, right? Chocolates, so they're producing chocolates. So let's say they're already producing chocolates for Abuja and Lagos residents. So now, yes, the existing products is chocolates are already producing for Abuja and Lagos residents. So let's say that want to now produce more, want to do more, want to enter more. You understand? Let's say we're producing for 10 before, 10 people. We want to start producing for 20. Let's say we're in 10 markets before. We want to enter 20 markets. So that's market penetration will help us to achieve our objective, our second objective. You understand? Through market penetration, we can what enhance customer experience. If you have effective customer relationship, we are relating with them very well. We are doing them very well. Be able to penetrate much. Is it customer that you did bad to? Have you ever bought some products or probably patronized some vendors before you're like, no, never again in my life. In my life, even in my generation, they will never patronize this person ever again. You understand? So how would customers be able to how will you be able to penetrate through customers, how will you be able to penetrate through existing market? That's if you was have a good relationship with them, if you have a strong customer relationship management. You understand? So that strong customer relationship management through market penetration will be able to what achieve that objective. All right, so the second one is product development. Product development is saying that we are selling new products to existing customers, new products to existing customers. So now, these same people in Abuja and Lagos now, these new people now, these same existing customers now want to give them another chocolate. Like now, for instance, this is diabetic chocolates now. You understand? Introduction of diabetic chocolates is a very good strategy. So this diabetic chocolate now that we're introducing now wants to now start selling it to Abuja and Lagos residents. You understand? So now this will help us to achieve the first objective. That's be able to expand our market and product. Be able to expand our wide through a wide range of distribution channels. You understand? Because now we're already a new product, we are putting it into the market, developing it. You get now moving on to the market development. Market development is sale of existing products to new customers. Sale of don't get it, don't mix it up. Oh. Market penetration, existing products, existing customers. Product development, new products, existing customers. Sales development, existing products, new customers. That means now those previous products we have, we now want to start selling it to Port Harcourt residents. We want to start selling it to Zamfara, Kano residents. You know, they told us that we're particularly in Lagos and Abuja. So we're not yet in new markets yet. So we now want to be selling those existing products towards new customers. So now, through market development, we're able to achieve the first objective. We're able to expand, you understand, through a wide variety of distribution channels. And we can also do this through what all these our supermarkets, all those contracts, all those products we're selling, you understand? We're able to, if we are supplying those supermarkets, entering new contracts, be able to what do that market development and achieve it very, very well. So now diversification, no, diversification um actually involves, so this is diversification, sorry. Diversification involves not product development is existing products to what new customers. But diversification is new products to new customers, new products to new customers or market. That's diversification. So although diversification is a great way of spreading risk, because when you diversify, you put your risk in different places. You understand? But entering a new market is a risk on its own. So that's why they have to do a thorough market research. So you have to also talk about it, that there's a need for a thorough market research. But if they diversify, then they can achieve their first objective, which is to expand their product market. You understand? So that's how we can use product matrix, answer growth matrix to actually assess the company. So that this is what we're trying to tell you to do. Basically, like, oh my god, so this is what we're trying to say. It's fine. Don't think of the past. Don't hold on to the past. Move on to the future. The most important thing now is that okay, you know it, so that next time you crush it. So don't wallow and say, if I had known, if I had known, this is what they needed. Don't think about all that. It happens and stand for. Just have to move on. The most important thing is, do you know what to do in case of next time? That's what matters. So then you conclude. Tell us about the diabetes chocolate. Chocolates should be introduced because they act, they say that they want to introduce. Should they introduce? Should they not introduce? Because if you're telling us all these stories, and eventually, your conclusion not have head, not have tail, not have direction, it's not good. So have direction. Yes, it should be introduced because it actually yields a positive contribution. And then, how many boxes should they produce? Because it told us that we should tell them, recommend how many should they produce in the first 3 months. So they should produce 5,000 boxes in the first 3 months. And then the answer of ghost matches was actually useful in actually assessing the development strategy of spices, the sales development strategy. Then conclude on all those other information. The internal and external parts of the manufacturing facility should be kept clean. And then the bromate as a preservative should be stopped. They should stop using it because now that has warned them. Then give a recommendation. Your recommendations should be in bullet points. Give a recommendation. Introduce diabetic chocolate because they asked us, they want to introduce, should we introduce, should we not introduce? And how many boxes should we actually produce? That's what they're asking us to do. So yes, introduce the chocolate and also produce 5,000 boxes per month. Keep the facility clean and stop the use of raw meat. So this is basically all that we're talking about in the